Okay. Okay. Hope my screen is up.
Yes, Gaurav.
Yes,
Yeah,
Gaurav.
cool. So right, so we are basically going to summarize this a book named by Trade like Only Disciple. So this book was written by two-person, Chris Catcher and Gil Morales. Uh, both of this author is very well known, at least in USA. The Chris Catcher is famous because he has achieved approximately 18,000% return in the period of 7 years. He's a PhD in nuclear physics in University of California, and he's currently as a professor, working as a professor. He used to work as a professor at University of California. Right now, he is a partner in Mocha Investor. So that was a period where he almost achieved 18,000% return in 7 years, span of 7 years. And the same point of time, Gil Morales is a partner. They used to work together. So, market veteran again achieved the personal account, approximately same amount of return, approximately 10,000 percent return in the span of 5 years. And and both of them returns are audited by KPMG and this audit company. So overall, this is authentic news. But and currently they work as a partner in Mocha Investor in last 15 years. And this Mocha Investor is basically named based on the Morales and Catcher investor. And they have managed to achieve with the public money almost 18% of CAGR year on year in the last 15 years, which is again a good percentage in terms of compounding. So, and they purely play on momentum, techno fundamental momentum, which we do, and hence they are might be relevant to what we gonna discuss today. Overall, my personal view would be so overall. Before I start, this book has almost I think 10 chapters. But frankly speaking, I have divided this entire 10 chapter into approximately in two or three section, not more than that. So what I mean is basically uh, overall section one, where they have talked about all the softer aspects, psychology, mindset, mistakes, all those software aspects. And then section two, which will talk about the one of the technical concept, which is pocket pivot. I'm not sure a lot of people know or not. If you know well enough, but if you don't know, we can discuss that. Probably from the swing trade perspective, this will be a good concept to discuss. Just a sec. Yeah, so we will discuss in these two aspects. And again, not I don't have too much information to discuss. I mean, a lot of concepts, lot of examples were discussed in that book. But overall, I have summarized in these two sections. So probably this session won't be too long. We'll try to wrap it in 1 hour, less than 1 hour probably. And also, if you have any examples or anything, we can discuss. I have few examples. Uh, I'll discuss those. Overall, my personal view. So basically, this, as you know, this is a O'Neill disciple. So they used to work for O'Neill company name as IBD Investors. They used to work for that company, and they worked for almost 5 to 7 years, both of them, at a very high position. And so their methodology, which they have derived, is on the back of O'Neill, William O'Neill. So if you have not read it, but this book, O'Neill, that is Canceling book, How to Make Money in Stock. I sincerely request you guys to go through that book. At least for me, that book is the major game changer. So have a look. If we have also done a session in book club, so if you guys have not gone through that, its recording is there in the book club this thing. So you can go through that if at all anybody is interested. But basically, a little bit of prior understanding of counseling methodology is required. This entire book will make more sense because they haven't talked about a stock scanner or not, because they assume that the reader would have read this book. They do have their canceling methodology to scan the book, and based on that, they will, uh, you know, derive the stocks universe. Yeah. Secondly, overall book detail, they have basically talked about the journey, about the super achievement and detail examples and all the stuff. Pocket pivot is a new concept. So this book I read sometime last year. I wasn't very much interested in this concept. This was a new concept to me. I wasn't seeing volume in this way. So sometime early last year, when I was starting my trade in US for swing trades, I don't do swing trade in India, but for the US market I do. And there I started implementing these concepts. So that is why the day in the chat I mentioned that that this might be a new concept for few of the people. So have a look. This will add in a very good concept of good tool in terms of trading the stock before breakout. So a lot of people we do to be on a breakout, which is totally fine. But sometime if you see the volume signature, you'll be able to identify few of the stock little early, and then even if the breakout fails, still you will exit the stock in the positive. Positive. Just a sec, sorry. So we will talk about those concepts and the stocks. Um, Overall, I would say this book is useful from my trading library perspective, but obviously not a top 10 book kind of stuff, right? So there are many other good books, but just if you take out this one concept, I think pretty much other part of this book has already been known or discussed one way or another. But nothing wrong in rediscussing stuff because that will add to your subconscious mind and which will obviously act positive to your market as and when needed. So you don't have to put a lot of brain. Some chapter I felt too long and might not be necessary. Also, hence it was hard to concentrate. So there was one chapter in second last chapter where they talked about the psychology side of it, but they have taken a few examples. Now, probably three, four examples would be enough, but they have given a lot of examples along with that. So that chapter I felt stressed. So obviously, but overall summary wise I felt good. Answering character might act useful, so as I said, existing strategy, don't no need to change your strategy. Whatever strategy you are using, you continue using that. Use this pocket pivot and few of the software aspects to basically enhance your existing strategy, right? So as I said, I have divided this entire book into two sections. One is section is commandments, which basically talked about the mistakes they did, or few of the what do you call, the psychology side or mindset side of stuff you need to succeed in the market. The first is obviously put serious hard work. Um, Investing is hard work, right? And investor requires no less preparation or expertise than any other white shoe professional practicing their craft. And this is the basic stuff, right? So basically, and this I always say, right? Success in the market is directly proportional to the amount of effort we put for the long run, and the sincerity of the effort, right? If you cannot take the success as a granted in the stock market. So I'm not sure how many you follow this Kobe Bryant. Kobe Bryant is one of the basketball player. He used to be. He's no more now. He was known for his skill, right, for the basketball skills, and he used to play for the Lakers, and Lakers used to rule on the NBA chart for a long period of time. There is one story which I want to tell you guys. So Kobe Bryant, I think in the age of 17, 18, I think 16, when he started playing basketball, he was God gifted. I mean, he was very much skilled basketball player, right? Sometimes you see, right, few players are anyway skilled, but uh, after 15, 20 years, he was playing. He was about to play one game. So one player was telling the story, and the story I would like to share. So basically, the match was about to start at 8 a.m., around 7 or 8 a.m. And this player, Kobe Bryant's colleague, player, right? He went to gym and he saw Kobe practicing in the gym. So it was approximately 4 or 5 a.m. So obviously before match people do practice. So he went there and Kobe was already there practicing. So he asked Kobe, so what's up? Like, how long you have been practicing and all? So he said, I came around at 3 a.m. and I've been practicing for almost 2 years now, 2 hours now. This guy also went back and he started practicing, and after practicing, when he came down and he's still seeing Kobe still practicing, so he went back to Kobe. So and he asked, like, it's almost like 3-4 hours you've still been practicing. So Kobe said, I was about to leave, but when I saw you, I restarted my practice session again. And then he asked what was the reason. So he said that I just want you to understand that it doesn't matter how hard you will practice, I will always be one step ahead of you. Overall, I want to say that irrespective of the talent, so Kobe was known for his enormous talent, right? Skill. He from the age of 15, 16, he was already way ahead in the game, right? A lot of players used to respect him, and he was way ahead of his game. With his skill and talent, he was way ahead in the game, but he still used to choose to do the hard work on daily basis, uh, to further enhance their skill and grow further, right? So in end of the day, I mean, we have to put the hard work. The success cannot be taken as a granted, uh, and the honesty and sincerity of the effort must be visible, right? So a lot of so what are the ideas as per me? Again, you guys can also add if you feel. But according to me, you need to add a details in the chart. Look at the chart. Look at the past big winners. Study successful investor. This will be really helpful if you do that. Lot Try to identify what is your area, what is your edge, and based on that, identify few good investors and try to follow them. read their trade, study their trade. Every people who are trading in that way, go back and check, like Mark Miniman is there, William O'Neill is there, these Gil Morales or Chris Catcher's trades are there. Go back, check in time, why they traded, how they traded, what is the skill they use there. Those aspects would be helpful. Practice your setup using replace options. So in TradingView, I'm assuming everybody knows that thing. You have to do the replay option. You can do that. Books, obviously, maintain to learn list. This I have learned again in one of the books. So basically, there are a lot of concepts you hear on day-to-day basis, right? Just add to your to learn list, right? To do list is there, a similar to learn list, and just be, every weekend you can put a, as a, what do you call, kind of the these are the book, these are the stuff I would want to learn. This is done, this is done. So it could be operating leverage, it could be charting skill, it could be the base quality check, all the stuff. You can list it down 20, 50, 100. Whenever you listen someone talking about the new concept, just write it down there, and then make sure you have a routine to learn those to learn list one topic at a time. YouTube videos. There are thousands of YouTube videos which might be related or connected to strategy. So these stuffs you can use. But in the end of the day, bull market has been easy. Bear market it will be difficult. Sideways market probably more difficult. So you need to have a very defined process, defined strategy, and you have to keep on working so that in long term, right, that strategy will be very well defined. Because I'm sure everybody who starts trading, it might be the small capital as of today, but eventually it will become a big capital, right? So and we have to build our strategy which is sustainable to that big capital. So that's the point. The second is buy trading stock. I not to discuss too much. I'm sure everybody knows this. Um, since these people do swing trade, it doesn't make sense to buy a trade in stage four unless you're shorting in the market. Or it doesn't make sense to do a bottom fishing, right? So basically, they want to wait for stage two or trading stock to establish, and then buy the stock. So similarly, even we people. So I mean, generally, first of all, again, the same logic. You have to define your process strategy. If you are a, for example, swing trader, position trader, whatever trade you have, but here if you're trading in the long, then you have to define your there should be some uptrend. The stage should be in the stage two or trading stop. Whatever method you use it. I generally use mark minute trend template, but to identify such a stock which are trading. Or if even if you use doesn't use trend template, you use in, like, some people I know use super trend. So anything we have a super trend, that stock has been defined as a up what do you call the trading stock or up stock. So have your own mechanism. I'll share mine, at least one or two later on when we'll discuss this pocket pivot. But have any methodology, but have some methodology to define or filter mark minimum trend template. Don't just, so for example, Borosel renewable, right? People have traded it. If you have made a good profit as swing trader, perfect. But as a positional trade, you know the result, and probably the output on the market on Monday would be very bad. So don't do a bottom fishing. Lot of uh, resistance are there, so you will suffer. So identify your stage two and go for that. Don't average down. This guy is a Paul Tudor Jones. If you don't know him, Google, you'll know him. One of the, again, GOAT, we call it greatest of all time trader existed in this market. There is a, what do you call, a small snippet here. Averages, losers average losers. So in nutshell, basically, if you are averaging your losers, uh, it's foolhardy, right? It basically doesn't make sense, because if your first trade didn't show the result, what makes you comfortable gives you confidence that further averaging in that loser will give you a this thing. Now this is a very like, for example, other day I was talking to one of the veteran in this our community, right? For him it's a very difficult, because he has been playing this market as a value investor, right? So if uh, he generally sees that this is an opportunity to add more. Now his if you are using a strategy of value investor, it automatically give you a it basically basic understanding that the business model of that company in and out, and hence you would want to average down. For example, Vijay Kedia sir, he averaged Vaibhav Global from went down to almost 10 40 50 rupees. So he knows, he might be knowing the trend. When the COVID went down, the price went down, he had a confidence in the business model, and he averaged up. Averaged down. That is different way of trading. But in techno funda, if you're doing a swing trade, positional trade, it doesn't make sense at all to further add to your position when it is losing position, right? Basically, you're compounding or you're snowballing your losses, which is bad. Cutting losses quickly, obviously everybody knows. So as soon as you enter into the stock, right, as I think we discussed earlier also this thing, you should have all the four conditions defined in your mind or somewhere, right? So what I mean is, like, the moment you enter into stock X, so for example, Monday you are buying a new stock, let's say X stock, right? So the moment you enter, you should have in your mind that what should be a stop loss, right? So for example, I entered at 100 rupees, 7% I'll give away. So let's say 93, 94 is something stop loss I would want to keep. So that is as simple as that. So that is one condition, right? So it means the stock didn't work in your favor. You are cutting your stop loss that and that point. So that is one thing. But parallelly, you have to think other three things also. So what I mean is, what if the stock worked as expected, right? So stock performing well. So for example, if you are thinking you won't sell the stock, just an example, right? Until the 11 EMA or 10 year daily EMA is not been reached, something like that, right? So in that case, are you prepared for that? 99.9% people do fail to follow their own process, right? Because they have a process defined there, but moment they see some profit of 5, 7, 8, 10% on their capital, they are excited or they are panicking to book those profit. That itself is a wrong mechanism that will talk in the later winners. But so have the mechanism, and do you have that mental strength or discipline to wait for your sell to trigger and then exit? So that is the second thing. After that, before that, you have to again think from the extended stock perspective. What if your stock within a 2 week itself went up almost 100%? That is a very good scenario, but you should have a mechanism to first of all define what is extended for you. So for example, anything 25% from 11 weekly EMA is extended for me. Similarly, whatever the tool, indicator, base, whatever you're using, so from base, so the from first base, if it's extended from, let's say, more than 50-80%, you can call it extended stock. So any mechanism you use, but you have to define your mechanism of extension first of all. And secondly, you need to think before itself that, okay, if the stock goes in that direction, if gets extended within 2 weeks, what you will do. You cannot decide later on after 2 weeks when the stock got extended, then okay, I will do this now. You should already be have been thought about it, like, okay, if my position, because I have put my 50% capital there, if the stock is extended, whether I will book the profit or I'm happy to wait for the pullback. I'm happy to wait for the step two to kick in. So that is something you have already have to define. And this is again, a lot of people feel they come back and ask in the group like why the stock is falling. Already the stock is extended for almost 7, 15, 6, 70, 80% from their key moving averages. The stock is bound to its mean reversion, right? So it will mean reverse. Now, are you comfortable to see that mean reverse? Yes, then it's okay. You can wait for that pullback. If you're not, then book some profit. Or you can do 50-50, book profit 50%, let the stock pull back, and the rest of them you can eventually book 50-50. So irrespective of what mechanism you use, you first of all have to define and then have this thinking before you enter into the stock. And the fourth and most important, where I struggle a lot, is consolidation or time correction. The fourth thing, what if the stock didn't move? So neither it hit your SL nor it is going in the up direction. It's just stagnating at the position where you bought. Uh, this also you need to define, right? So this is something I'm really sometimes struggle. So sometimes since I follow this stuff very strictly, and the stock consolidate for sometime couple of months, I don't even feel to sell it. So earlier I used to define like 2 month or 3 month. Now I have to for the swing trade you need to shorten, right? So probably let's say 15 days the stock didn't perform, you have to sell it off, something like that. Again, you have to have a mechanism here also to say that okay, if time consolidation, time correction happen on the stock, especially in the bull market, because there are a lot of opportunities. Had it been sideways market, okay, you can take less action over here. The whole secret of to winning a big stock market is not right all the time, but to lose the least amount possible when you're wrong. And we already know this, cutting losses quickly, right? I mean, automatically your risk reward goes in your favor. This is the only thing which controls which you have a control on a stock, right? Nothing else. The moment you enter into the stock, everything goes to the market. You don't have any single control on that stock except this. This is where you can take the action, where you can think, okay, I have the only control. So if only thing which is in your pocket is something this cutting losses quickly. So use it very adequately. Yeah, let your winner run. So you need to capture a big move again. So if you heard a lot of big investors like Minowin is there, William O'Neill is there, David Ryan is there. Uh, anybody, right? Anyone. You will always hear, especially from the who write the techno funda concept, not the obviously the value investors I'm talking here. They basically have a very less strike rate. So where strike rates means win rate, which means out of 100 how many trades they won, and out of 100 or how many trades they lost. Yeah. So basically they have only 39, 40, 40, 40, 40, 45, that kind of a win rate. But still they are very successful, right? Because in the long run they always have this massive risk reward, which means uh, for every 1 rupees of risk they are taking, right? They are losing. They are making 4 rupees, 5 rupees, 10 rupees, sometimes 20 rupees. So your reward should be very highly, biased towards your towards you, right? Against the risk which you're taking, and that is the only thing you can change in long term. So this is something I have written. So basically, once you gain an experience in the market, right, you will eventually realize after 3 year 2 year, once you have a solid strategy in place, you somehow cannot alter your win percentage too much. So for example, if I'm using a certain strategy and my win percentage, let's say 50%, that's a random example, right? So I cannot, like, after 2 year 3 years of practicing in the market, you cannot suddenly change something in a strategy which will move your strike rate from 50 to, let's say, 70%. It's fairly impossible, right? Because your overall your mindset, your strategy, your stock selection criteria is defined now after 2 3 years, right? So your strike rate will always be fixed. So out of 100 trade, if you are been after 3 years, you saw that you're able to gain a positive result in a 60 stock and negative result in a 40 stock. So that will be pretty much fixed. You cannot alter too much unless some miraculous change happen in the strategy. Hence, your focus automatically should shift towards the reward to increase your reward. Because if you want to increase your percentage of winning in the market, you have to automatically shift to reward. Hope I'm making sense. Basically there are two things which will define your success in the market, right? Strike rate, so every hand, and RR. I mean, if you someone new, and I'm sure a lot of people know, but not, feel free to unmute and ask questions if you have any. But this is the only two things which will basically define the success in the market for long term, right? So what I'm trying to tell you is, like, strike rate will be fixed. After a certain period of time, once you have achieved some experience, this is very hard to alter unless something, miraculous indicator or something you have found. So hence your focus should be more on the RR side. So right now, for example, you are risking 1% to gain 3%. Probably you can further one risk per percent and get the reward of 7. This thing which you can take action to improve, but this thing probably not much. So, and if you're new, then obviously this both things will require some improvement. So this was something I discussed long back in one of the session, and I think book club only, I don't remember where, but again I'll discuss, and if you have any question, let me know. So basically I was talking about the edge, that point of time. Your edge will define your winning percentage, average win minus percentage of loss into the average loss. So what I mean is, for example, your RR is 1:2, right? Risk reward, if you're taking 1:2 and you have a decent win rate. So when a decent win rate, I mean, every time 40% when you are risking, you are gaining 60%. So 0.60, 0.40. Okay. So every time you are risking 40%, you are gaining 50 or 60%. Sorry, my bad. So every time in 100 trade, your winning trade are 60 and losing trade are 40, right? That defines your PWPL. That is your overall winning percent, overall losing percent, right? And risk reward is this segment, which we say is every time you are risking 250 rupees of your portfolio, you are making 500 rupees, right? That is 1:2. Very simple maths, which overall you do the calculation, you will get an edge of 125. Means every time with this stat, means your, if for six with 60% of strike rate, which is a very good strike rate, and 1:2 risk reward, you are basically able to achieve 125 pound or rupees or whatever average gain per trade. That is the part, right? Now let's go to the second part. If, as I said, right, strike rate you won't be able to change, but risk reward might be later you will be able to increase or decrease. So if your risk reward is right now 1:3, okay, now you increase to 1:3, which means every 250 rupees, if you are risking, you are making 750 rupees, right? So somehow you're able to increase that. But your win rate, right? So how many trades you are able to achieve this kind of risk reward? Let's say only 40 trade. So it means out of 100 trade, you are able to achieve 40, in 40 trade positive scenario. In 60 trade, you are basically losing 250 rupees. So in this part also, your edge will become 152. You see the improvement, right? If your win rate went down, but your risk reward increased, right? So that is where you are again, making your big money, a little bit better money from the first scenario. But the best scenario is this scenario where you get an average win rate, which means out of 150 losing, 50 winning. So that's a 50-50. Most minimal, most easiest one. But your risk reward is still 1 is to 3, right? Where you are making 250, 750, which is win-win case in both the scenario. In that case, you are making 250 rupees and average gain per trade. Uh,
So
Basically, what overall. Mhm.
in first one, it will come around 200, right?
Uh, it's a calculation mistake, is it? Let me
60
see.
into 500, it will be 300, and then minus 100. 40 into
300
250.
exactly. So yeah. Okay, so calculation mistake, 300, and this is 100, 200. Yeah, 200. Correct. Yeah, that's correct. Yeah. But what I'm basically trying to define here is basically overall you need to focus on this, right? 1 is to 3, but decent win rate. So you, as I said, you cannot automatically, miraculously change this entire win rate quickly. Like from, let's say you have 50-50, from 50-50 after 3-4 year of experience, you cannot go suddenly 70% win rate. But what you can more focus on your risk reward. So every time you are risking. So what I mean is a risk reward. Earlier, for example, you used to risk 10% to gain gain, let's say 20%. You can narrow that 10% to, let's say, 5%. Now at 5% loss, if you're still gaining the 20% of gain, that becomes almost 1 is to 4, right? Against 1 is to 2. So that will automatically. So every time you're taking trade, you are cutting your losses at 5%, but you are making 20% return. So that's something positive you want to see. So that is where your game will improve a lot, right? So if you start focusing on cutting your losses and letting your winner run. Yeah. So yeah, and then one thing they have said that, right, like less action, of course. So as I said, winner run, which means once you have identified a good stock in a bull market, right, don't hinder its compounding, right? Don't go and sell it because some random reason, and you sitting. So this is the perfect scenario where your winner has got a good allocation. It's performing well in the market, and all you have to do is sit more and think less. That is the best case scenario in the market, right? So this way your focus should be. Position concentration. Concentrate your capital. Again, this is one area I have to improve more. Right now, I have almost 12 to 13 stock in portfolio. But in bull market, you should be very much concentrated, right? Because as I said, right, once you have a very good solid strategy to identify good stock, all you have to do is concentrate few capital and few trending stock, and you'll make most out this market. The moment you'll diversify, go beyond 15 or 16 stock, right? It will be very hard for you to especially in bull market, you will do average compounding. That's it. So the idea in the bull market is to do a lot of good return, so that in bear market and sideways market, if nothing happen or even negative happen, overall your CAGR remains above 20, at least around 20. So that's the idea. And if you have read this Ramdev Agrawal, one very famous quote, right? In like in last bull market, he went from few to 100 crore or some crore, and then he came back, and then again went up to 150 crore, again came back, that is very famous. If you go and Google Ramdev Agrawal's portfolio change, right? So in every bull market, he used to make 10x, 20x, 100x. In bear market, it came down to 50%, cut down to again in a new bull market, he used to make again 10, 20x. Again, it came. But overall, if you see, it's a linear. It's not a linear one, but overall, from point A to point B, it will be the positive growth. So that is something we want to concentrate on. Dealing in market leaders, this again, they have identified, again derived from something from the Cancelimonial method, right? You have to identify your method to identify few of the market leaders. Basically, how to define market leaders? These are some characteristics which I have discussed many times. It should be the few first one. So, for example, chemical space and IT space, right? Right now, it's a beaten stocks. There are a lot of stocks not performing well in that space. Go and check which of these stocks are making new high, even if that sector is not performing. The moment the sectoral tailwind will start, these stock will basically be the big winner. So that is one way to identify. Check the decent RS. So right now, those stock would be definitely in the base, right? Because base breakout hasn't happened. Check the stock which have high RS itself in the base, right? Even the stock breakout hasn't happened, sector breakout hasn't happened. Basically, sector is not performing yet. right? But they have very high RS. It means a high accumulation might be there. It's basically outperforming the Nifty or Sensex, whatever the this thing is there. So identify those stock. Again, in the parallel to that, you have to identify few of the fundamental parameter. Like automatically, you see there are good growth, good EPS jump, strong sales, leading price actions, and decent business model. So, for example, if the company has done a lot of good capex in last 2 to 3 years, and generally capex, to realize that capex, let's say after 2 years, that capex is about to start, and at the same point of time, chemical sectoral bull market has started. The stock which has done the maximum capex, if it is about to get realized now, which has done in 2 to 3 years, then that stock will about to get a lot of benefit out of it, right? Then obviously there should be some supply, demand, and concepts also. But in nutshell, you have to find those stocks and be prepared with your list. I'm not sure if you have seen that chemical video of Vivek sir. If you go back and check, he has talked about Deepak Nitrate just before COVID, right? That was the one video stock which made me to come into Technofunda. But if you go and check, he was checking the RS of lot of chemical companies. So there was a Deepak Nitrate and there was one more company he checked, and eventually those companies go in COVID, right, and didn't fell much versus the Nifty and other stocks which was falling at that point of time. I'm talking about the COVID March 2020. And then later on, this chemical stock was the first stock to basically run, like pharma chemical was the first stock. So few of the early stock which started making new highs, and they became multi-bagger within 3 months, 6 months, or less than that. So that is the idea, right? When the market, especially in the bear market, you have to do more scanning. I mean, you have to do a lot of scanning, creative way of scan, so that you are able to identify some good, or not even a bear market. Let's say tomorrow market falls few percent, right? A lot of stock will squat. But see, there are few like Power Mac in my portfolio. I'm saying that stock is, go back and check. It's not even buzzing. It's hardly within 0.5, 0.6% fall. So Nifty is falling 1%. That stock is squatting hardly 0.5, 0.2%. So that shows the relative strength of the stock, right? Like I'm not sure whether in future it will outperform or not, but that gives some sense of probability that okay, when the market will improve, hopefully that stock will make good return, because market is falling, people are accumulating. So that's the idea. So identify, have a mechanism to identify this market leaders, have a mechanism or routine, especially. Chart patterns again is important. They have discussed a lot about the chart patterns. They said that high quality base is very important. This is again few things you need to identify. One is constructive base pattern, which means if you are trading cup and handle flag pattern, that is high probability base pattern, where the probability of you winning is high in those pattern. Hence, practice on those patterns. So you need to identify such base pattern. High RS within the base, undoubtedly. High accumulation on the right side of the base. Again, hope people will know this, but no, who doesn't know, basically, what we are saying is that, uh, I'll show you in this chart, right? Or let me show you some random example. Just pause sharing for a minute. Okay, so if I resume my screen. Yeah. So basically, what I'm trying to tell you is that if the base formation is happening, if you see generally on the right side of this power mech only I'm showing. So you see this side of the base, right? From here to here, you see the red candles at the bottom, right? That is quite high. But the moment you see the right hand side of the base, you see the blue candle. Blue candle is basically positive candle which you use. So that kind of accumulation. So this is what I meant when I said the accumulation. Then there is another way also to do that, by in Market Smith also it gives a rating to the accumulation. So you can go and check in the accumulation that anything above B should be positive side of it. So that is, I'm saying, high accumulation on the right side of the base. That is very important. If you don't see this, probability of that stock to fail. So that is not a high quality base. So a lot of US stock right now, if you go and check, I'll show you. But basically, if you don't see good accumulation, good this right side volume signature, or even if you go to on daily time frame, if you don't see this kind of accumulation here, right side of it, accumulation means this green candle. Then basically it's not a positive base pattern, right? So uh, so this is again you can use for your ranking. So out of, let's say, 10 watch list stock you identified, if you want to see which one or two stock is the one where you want to invest, then you can again use one of this ranking mechanism where the accumulation is in the right side of the base is high. Higher the accumulation, it means higher the footprint of FIIs, DIIs, or HNIs. Hence, probability of that stock to perform is high. Volume drying up, you want to say, this I'll show you in many examples later on. Prior uptrend, again, before the base formation, you want to see some stage two, which means stage stock was already in the stage two uptrend. Suddenly, the base formation has happened because of, let's say, market decline or something. Something has happened in the stock or the trend of the stock, and then it formed a base, and then it should form the base above 11 weekly M. If you see this, I have told you, like, at least quantum member, a lot of people more than 10 to 20 times, like, if you see above some key moving average like 11 weekly MA, or 20 or 31 kind of, especially 11, if you see a big bet, I have already mentioned that there's a lot of accumulation, it means happening. Go big in that such stocks, provided other parameters are also satisfied. Not like you saw a base of a weekly 11 weekly MA, but the fundamental is pathetic. You bid big, you're going to bid big in that. And obviously, sometime 26 52 week high in the base, that is good sign. So again, for example, if I show you the, I think Power Mac was the only one. No, there was one stock I was looking. I think it's Lloyd's Engineering. It was basically started hitting. Before the base breakout, it started hitting 62-week high, or 52-week high. No, I think some stock, I don't remember. But what I mean is, this basically indicator, which is the green one, is 52-week high. So the base, I mean, even in the Lois Engineering, you can see the base breakout hasn't happened yet, right? It is still forming a base here. It will probably forming some consolidation on the top of the base. But the stock started hitting 52-week high or 26-week high before within the base. Again, a bullish sign, again a positive sign. Pocket pivot volume, this I'll talk in a minute when we discuss about section 2. Strong industry group, strong fundamental properties. In nutshell, what I mean is, when you have these kind of checklist or one these kind of parameter in front of you, right? You will wait for your stock, for your buy point. You cannot, like, everyday stock, like I saw many Twitter threads where they are posting, 10 stock breaking out for tomorrow. You cannot trade in every stock, as simple as that. You have to have a good scanning mechanism. Once you're done with that, you have to come up with some good core watch list, let's say 10, 12, 15 max. After that, you have to further cut it down to one or two stock which is tradable tomorrow. If the stock in your portfolio didn't perform well, hit stop loss, or hit your sell rule. Okay, these are the two tradable idea which I'll enter now. Otherwise, I'm not going to touch those tradable ideas. Simple. So don't be in a, even though that stock will perform, irrespective of that. So the idea is, identify those stock, wait for your right pivot point, and just sit patiently. As soon as you get a entry point, you enter. Otherwise, fine. Your stock in the portfolio stock itself is performing well. Then why do you want to play game in that instead? Emotions. Not much to talk. I think we already know this stuff. But one important thing which I want to highlight is, being in the state of now, never predict anything. I have seen people, like, or at least, like, they say kal ye stock 20% circuit laga dega, or kal ye stock will make new highs after the good result, or something like that. No, those stuff. Don't go in situation of that. Always think in terms of probability. It maybe it will hit 20%. It might not hit 20%. It will hit 20%. It's obviously in my favor. But are we prepared if it doesn't hit 20%, it goes minus 20%, right? Some stocks result aata hai, we get excited seeing the green numbers, but sometimes stock doesn't perform, or it goes, or probably hit lower circuit, right? Are you prepared for that? That is the real thing. If you're prepared for that, then automatically, 20% circuit hit karega, that is automatically been taken care of. You don't have to worry about it. Are you prepared with when it, if it is about to hit negative 20% circuit? That is something you have to be in the game of. So basically, be in the state of now. Don't worry much about the future. Stop predicting either positive or negative. Be in probable mind always. And this is again, if you predict, your preparation will, as I said, right, same thing. The moment you predict, if you think that, okay, seeing the green result, you got excited, you posted in Telegram, or stock will hit 20% tomorrow upside, and your entire preparation will be limited to that thought only. Like, you will start thinking, अब मैं इसको कैसे scale up करूंगा. And the worst thing is not the person who has pinged, but the person who has seen the message without even bothered to go and screener and check about the result, and he has already made up a mind that tomorrow I'll buy because this X person, because he has a good strike rate in the group, or anybody like me or Vivek sir, even if pings, right, or if Vivek sir has pings, that I will buy that stock. That is the worst thing you can do. You should have your own mechanism to first of all go back and check, okay, whether the result is good or not. Okay, result is good, okay, looks good. If it goes up, I don't have worry, I'll make a position. But what if it doesn't go in the direction of that? Then whether I'm prepared or not, something like that, right? So you shouldn't be worrying about your future. I mean, about tomorrow, what will happen. You should be prepared in all the probable direction. If you read Mark Minervini book, he explains this very well, right? No, before you enter into any stock, you should be prepared with anything. What if tomorrow the some some drone attack or bomb attack happen, some city of the country, and are you prepared for that? You're suddenly market will collapse. Are you prepared for that? So all those scenario, worst case scenario, are prepared for that. So that kind of stuff is talking about. And obviously it will connect it to your like lot of risk profile, how much equity allocation you have done, asset allocation, all this stuff also. This is second, which I recently experienced. Like anything, if something not good happening in your life, right? It will automatically start reflecting in your PNL. This is very important. So do not trade when the things are not positive in your life. What I mean is something not as expected is going on in your life, and still you have a push or urge to trade in the market, thinking that I have my process in place and I will execute it, but one way or another way it will gonna hinder it. So this I mean, recently in December I had some setback personally, and um, still I was trading in US market. I actually compounded. I think I told I compounded my US portfolio almost more than 2x within few months. That was the bull market in US actually it was going, and I was continued that, and suddenly the overall portfolio went off to 30% down when the market was doing little bit good, but the stock selection was bad. Um, in general, if something is not happening good in life, right, try to hold your horses. No, don't go too excited in the market still. Um, uh, this is the one picture I have taken from the same book, Just a Livermore Equity Curve. So I'm sure you guys know Just a Livermore. If you know, then don't know, then Google it. This guy has started from nothing. Like he started with 250 and 50K rupees. He shorted, he went up, and then again went to zero. So twice he blew his account, right? He went to zero in single day. And then again he went up to 1 million. Then again he went to zero here, right? Again. So you see the amount of knowledge he has, right? Every time he's blowing up to zero, he's again coming back to 1 million, 2 million, 3 million, and then finally he was one of the richest man in this world. I mean, if you go and check it, just even room, right? At that point of 1929, he made almost 100 million profit at that point of time. And after that, eventually he again he died because he lost everything in one crash. And every time people went and investigated, every time this loss which you see, right, it was directly or indirectly connected to the family related issues. So he had his son kidnapped, he had his son dead, his wife, bad marriages, something related to family. These stuffs are happening in his life, and every time those stuff was happening, this kind of drawdown he was seeing. And when his son died, he almost lost everything. From 100 million, he basically crashed and he shot himself. So this is extreme example, but in general, everything you are personally, right, it's at Sakota thing which he says, as a person, if you are a random, your trading process will be random. If as a person you are in person, you will overtrade, right? You will panic, you will every time you will see someone talking. If you don't have discipline, it will definitely visible in your PNL, this stuff. So in nutshell, if you as a person you have to grow first, automatically this PNL will be growing automatically. I've seen a lot of example. I think I'm not sure if that person he is here or not. Uh, he started going to gym. He started working towards his growth investment mindset. Started reading good. Automatically, his PNL started improving. Uh, there is a big correlation, about your like how you are in the life. Like you have discipline to wake up at 6. Do you have discipline to go to gym? Do you have discipline to eat healthy foods? Automatically, those discipline will come to your PNL, your trading style also. You don't have to then, otherwise, consistently, you won't be able to maintain. If you're faking it, then you won't be able to do that. Um, right, so this is fine. Again, no noise, no news, no tips. This is very important. Cut the noise. I've mentioned it many times. The book also says that, this is very important. I read, like in the end, trader must insist that they trade alone, free from distraction, interference from the outside world. I recently started practicing this. I think it's very much visible how much better you can achieve if you are cutting out all your distractions or noise or whatever, anything which is bothering and hampering your trade. Because this is the lifetime opportunity where you can generate a generational wealth, right? And if you don't want to mess it up, I mean, that realization is very important, because this is basically, even if I get a drop from this entire one ocean, right, entire ocean, you'll make a massive money. So idea is to not mess this up. This is one opportunity, one good strategy, one good community. We have identified that. Cut all the distraction, interference, and make and focus on only on this your process. No more trading. Identify if you have a problem with this, especially in the bull market. I say that if you have a bad habit built in the bull market, right, it will basically going to destroy in bear market, because every day you're scanning the stock, every day you're trading in the market, in bull market. Automatically in bear market also, it will be very hard to for you to basically sit idle, and I'm sure you're going to mess it up in bear market. So don't build a bad habit of over trading in the bull market. uh, and especially in bull market, because we think we are making money, but actually in bull market you can make lot and lot of money. Like for example, people like this, like Gil Morales and this people, right, in 5 and 7 years they compounded their portfolio 18,000%. This is what big money means. It's not that you're compounding 5-10% and every trade you're taking. That's what not we are talking about. If that is something you're this thing, that is okay. So probably, so in nutshell, basically, you should be focusing on compounding such stuff. I'm sure it's very hard to do that, but if we aspire to do that, even if I do not 18 to 9,000%, 90 times of my capital, not bad, right? Uh, what could be the possible reason? I have listed based on my understanding. Identify your problem. It could be FOMO, of course. Like somebody said, okay, why his stock is making new high? Am I not? Let's sell mine and buy his, or maybe every time I scan, I find new breakout stock. I exit me within 2 days. After 2 days, the stock went up, and I'm buying some other new stock. So that is another problem. Addicted to trading. That is could be one of the reason. You are full time. You don't know what to do. Let's go and trade. So that is something with the reason. Lack of system and process, of course, this is majority of the people. Now the thing is, a lot of people not they're not happy to accept itself that they don't have system, right? And this is the problem. They are living in denial that I have some system which they even don't know, or they cannot summarize in one page. And that is what the big problem is. You have to first of all accept if you don't have it, and then work on it, like where I am missing, where I'm lacking, what are my problem areas, whether I have foam or not, how much I compounded in last 1 year, 3 years. I mean, last 3 year, as I said, that bull market was so sacrosanct that you should have compounded capital. I'm not talking about your portfolio one or two stock. If you haven't done that, what was the problem? Where were you lacking? If you are you new in the market? What was the system which was missing? Identify those problem areas and work on this. Fear-based trading, and this is important. If you have fear-based trading, I'll discuss in the next step. Running their screen every day, that could be the reason. Lack of concentrated watch list. So whatever the reason you have, identify and try to cut down this over trading and stuff. If you're doing it, if you're not, then no problem at all. Don't be in a fear while trading. This is again a few of the books part I've taken from another book also. So there are few signs where you are doing a fear-based trading. Identify if any of these signs goes with you. If goes with you, then try not to do that. Like you are still trading in your comfort zone by taking a small size, right? So you know that you have read the con call. You know the next quarter is going to be good. But still you are taking 0.5, 0.25 kind of stuff in a bull market, when the start of the bull market. Not now, maybe, but when they start, like that is not relevant, not good, right? Like the sectoral tailwind is like hotel sectoral tailwind was there 6 months back. I remember few of member, even I have taken a position in that one of the hotel stock, right? So in that stock, if you're starting with 0.25, knowing the sectoral tailwind is there, knowing that every hotel in India is right now overbooked, highly priced, and still you are taking 0.25 position, kind of portfolio allocation, that is shows that you are still doing a fear based trading, right? So come out of your comfort zone, go for little big. uh, and think from the portfolio risk perspectives always, right? As I said, right, even if I'm taking 100%, deploying my 100% of capital in one stock, and if I'm cutting my loss at 2%, max 2%, right, still at portfolio level I'm losing only 2%, right? So that kind of math when you'll do, you will be comfortable to even to deploy 20% capital in one stock, knowing that at portfolio level I'm not going to mess up, because it will hardly 1 or 2% of impact on portfolio. So I can take a risk of 5 or 7 or 8%, that kind of stuff, or thinking you can do that. So think from that perspective, and don't do such a small position sizing. I saw somebody in group talking about 0.25, 0.1, 0.10. I mean, seriously, I mean, even if you find the perfect pivot point, uh, what will you do? Even if you do an average up, to do from 0.5 to 5% kind of only average up, it will change the entire average price itself. So I don't know what was the point. Second guess obviously own and looking for the external confirmation. This is again sign of fear based trading. So every time you are taking position, you are not confident about your stock, you are looking for some external confirmation. And when you look for the external confirmation, basically you're buying the stock when the noise has already started in the stock. So that is a very bad. Take profit too quickly. uh, that itself, like the moment you see 5 7 6% of profit, book kar lete, kya pata ye bhi nahi rahega. So that is again a fear based trading. Paralyzed by the losses and need being right always. This is very important. I know one people in a group he pinged me. He has a problem. Like he took, let's say, 7 trade. Every trade is profit, right? So he is happy. Now the profit also he's making only 3 4 5%, but he's still happy. The moment he see 1 or 2% loss, then he goes into a paralyzed mode. He is not able to book the loss, and that loss basically snowball and goes to from 5 to 10, 10 to 20, 20 to 50, 50 to whatever. So this is one a big problem. A lot of people are not able to do that. The thing is, I'm sure a lot of people here also might be missing in some of the areas, but have some mechanism, to uh, cut it. Like, first of all, aware and realize and accept that you have this problem, and then cut it off. Just like, for example, this problem I used to have it, right? Over intellectualization, where I was looking every pieces of that puzzle before taking any bet. Like, again, this is a fear-based trading sign where you are looking for anything and everything before you take a position, right? So, for example, अभी मेरे को position लेना है, तो मैं उसका fundamental भी देखूंगा, cash flow भी देखूंगा, corporate governance भी देखूंगा. I'll go to some do scuttle, but also I'll also do the technical analysis. I'll check 10 20 people. Now you should do that. Obviously, you should do that, but you should have a mechanism to do sometime even you have entered the stock also. Like, if you have found a good stock at the right point, don't over intellectualize it. Like, take a position, keep on researching in the stock, but take a position, right? And it's a big trap, as I said. Each time we think that we have mastered the stock or made the market will come back and feel you realize that, okay, you have lot, like polycap, when you are like thousands of people have done the core analysis, I remember. In not even single of people have highlighted the problem, and the polycap face that problem, right? So you, even if you think you have mastered the stock, you have read everything about the stock, there will be something somewhere which you will miss it out. So trust your chart, trust your instinct, take a position. Worst case, you will lose, accept that loss, go to the next stock. Strategy hopping, don't do that. Adjust your strategy. So for example, if today I'm talking, tomorrow someone else will talk, third day somebody will else talk, and every time people comes on the webex, right, they will always talk the positive part of it, right? You will get excited, you think, okay, ye to bas kaam kar raha hai, let me go and check or take his strategy. Don't do that. If you have a strategy already, for example, if you're a new guy, then obviously you will be looking a lot of strategy, which is totally okay. But once you have gained experience in the market, 4 5 3 years of experience in the market, or maybe 10 year 20 year, uh, your strategy you can adjust it here and there. For example, in my strategy, I never changed my strategy. I incorporated this pocket pivot for a few of the aspects, but I never changed this entire strategy, right? Similarly, don't do that. Like, it could be the many reason. One reason that you have many mentors in the market, uh, so hence many strategies. Probably you don't know what will suit for you. So that is a one problem, right? If you really still you are struggling to identify which strategy will basically suit for you. If you're not able to identify that also, that is a problem. uh, Maybe your initial phase of learning, which is okay. In that case, you will do some strategy hopping to identify one good strategy for you. Money made out of luck, hence not concrete, which is fine, because uh, you entered into the market, you somebody based on some tip or somebody said in the Twitter, you took a position, and after, so that is not a strategy, of course, but you have to think about it. And looking for 100% strike rate, this is the biggest problem. Every time when you test a indicator strategy or whatever, right, you are looking 100% strike rate with, hence you are looking for the magic strategy, right? नहीं होता. If you get 50% of a strike or 60% of strike rate of strategy, a lot of people will kill for that kind of strike rate, believe me, because they have confidence that they will be able to prove their risk reward. So even 60% of strike rate is a massive good strategy. So if you're getting a strategy जहाँ पे if you're taking 100 trade, you are able to get 60% of win situation, 40% loss situation. Very good strategy. Don't switch it. Don't, you try to do a small changes, tweak the small changes to improve the strike rate of the strategy, but don't totally go to the new strategy. This is fine. Bear market, so basically these are the some strategy which I use. Like, sideways market, you can use pocket pivot and pull back. Bear market, don't do trade, or if you're doing, try to identify these kind of list where stage 2 or high RS, and keep the list ready. That moment stock moves back, you can trade in that. Or you can identify some shorting candidate, not in India, but in US you can do shorting in cash market also. So something like that you can do, right? If you stage four stock, identify good shorting stock and you can do the shorting. We'll stop or pause for 1 2 minutes. If anybody have any questions, any comments to make, if you have read the book, or if even if you don't have read the book, you can take this Q&A or anything, and then do this
Sir,
session.
I have a question, sir.
Hmm.
Sir, my name is Prabhash. I have a question.
Yes, sir.
Every time we hear, like a lot of people talk about RS check, RS value. Can
Hmm.
you tell that how exactly can, because I go to TradingView, I check the RS line or whatever is there,
Hmm.
but I am not able to come to a some kind of indicator or something which tells me, okay, this is the RS value.
Okay, so RS is not a value. RS is a relative strength. Tell you in probably quick minute. So RS is basically it's tell you the strength of the stock against the um, benchmark you are putting. So right now, for example, let's say I'm putting a benchmark as a Nifty, right? You can put any benchmark. You can put BSC mid cap. If Lloyd Engineering is in metal, you can put a metal as a benchmark, right? It doesn't matter what is the benchmark, but basically it's telling you the strength of the stock against that benchmark. Why we check that? The reason is simple, that if I have to buy one stock out of 10 stock, I would want to buy the one of the best stock, right, which is output. So basically law of that Newton's second law, right, jo bhi is in the state of motion will remain in the state of motion, right, first law, sorry. So that is what we are what trying to identify. So we're trying to find out the stock is outperforming the benchmark, and hence it will remain outperforming the benchmark, and that hence will buy. Now, so there is no rating, by the way. Rating is only given by the market smith to a stock RS rating, right? There is, I mean, general, if a real world concept, there is no rating. It's basically the line. So what we are saying is, if this you line which you see, the green line, this one indicator I have used, trader line, RS line, use any RS, doesn't matter. But what we are saying, that if the average line say upper your RS line is there, it means your out stock is outperforming. If it is below, it means stock is underperforming. That is the simple way to look for RS. That is one way to do
Yes.
from the indicator perspective.
Okay, sir. Sir,
Okay.
just continuing with the this same thought, sir. Like, what do you, by your experience, support, sir? That is the weekly trades better or daily? Let us say I'm a
Okay.
person who has access, who has time to do both.
Okay.
So, because I've seen things change drastically when they become in the weekly and when they're in the daily sense.
So I don't know how to answer that. I personally always experience that weekly is very rewarding. Less of noise, less of clutter. Big money can be made. Risk reward is favorable. But a lot of people struggle to do weekly. Do receive message and they struggle to do weekly. So you do on daily. It doesn't matter. What matter is what's your psychology. So for example, if the Lloyd Engineering, if I go on daily chart, okay, before that, you see the base formation over here, right? It's looking so clean, so nice, so beautiful, right? Above 11 weekly MA. But the moment I
Yes,
go
sir.
on daily chart, it's so haphazard, right?
Yes, sir.
So are you comfortable of these kind of stuff? If you are comfortable with this kind of stuff, you fine with the daily. But otherwise, I personally feel weekly. But if you have a time, right, and also it depends like what kind of investor you are. If you are a positional trader where you are happy to wait for a stock to perform, like you have a patience and discipline to see your stock performing, sometime in consolidation for 3 months, 6 months, 8 months, then positional trade weekly is best. But for example, if you're not happy, you want an action, you because you are full time and you have an action to see the stock move 15-20% within few days and then look for some other stock, you love the actions, too much active you are, then daily will be good for you. So because in weekly you won't have a discipline or mindset to control that thoughts. So you better to switch on daily in that case.
Thank you.
Yeah, thank you.
Yeah. Gaurav sir, one question on RS.
Hmm.
As you follow weekly chart, what's the time period you follow on this one indicator?
Weekly, I look for 10 this thing. So I'll show you my setting. It's very simple. So basically, moving average length is 21. EMA, that's fine. So basically, 21 is a moving average, anything above 21. But more than this, I look for the RS rating in MS, Market Smith. So the Market Smith, if I see anything above 80 or 70, but anything above 80, 90, that is more preferable. So, but even here, right, I see something like, right now, for example, Adani Power. No, Adani के साथ थोड़ा I don't like to trade, it's too cluttered stock, but still I want to show you that, for example, you see this RS. So basically it means that RS, your relative relative strength is making new high before the price making, and that is a very bullish sign, right? So basically what it means is, and even you see the volume here like contracted khatam hai. So that is a very bullish sign, very positive sign. So what it means is whenever it will burst, it will again start it. So it's basically making a flag pattern. If you know the flag pattern, it's consolidating. If I show you on the daily chart also, it's very beautifully contracting above 10 daily EMA. So I don't know if I'll take a position or not, but basically this stock is, whenever it breaks out, it will be a massive move. Again, it will start giving. Um, and risk reward is very favorable. If tomorrow, if I'm taking position from this candle to daily EMA, if a daily EMA is your stop loss, it's hardly 2 or 3%. Sorry, if I go here, so hardly 2 to 3%. So I got deviated from your question, but hopefully I answer your question. So basically, what I'm trying to tell you is that uh, one, if you're looking at the indicator, look for this new high before the price. That is a good way to see the RS. And if you're seeing the RS rating in the MS, then anything above 80 is a positive sign.
Yeah, very clear. Thanks.
Gaurav, coming back to the Lloyd chart,
जी.
उसमें we had seen earlier कि right side में you need to see no more of volume picking up
Correct.
on the right side of the base.
Yeah.
तो यहाँ पे that is something which is, do
Happening.
you see that happening, because the volume seem to be very contracted here?
Yeah. So that is what I said, right? Volume has to be contracted. That's a quality of base. Okay, let's do this revision quickly. That will be a good practice for everyone. So if you see the constructive base pattern, now I say constructive base pattern, basically cup and handle flag, anything which is ascending triangle is also one of the constructive. So if you see this base pattern is happening constructively because the candles are very small, volume is contracted before that. RS within the base, you see the green at least, little bit here, white, red came, which is like this thing. But if you somebody can go and check in Market Smith, I'm sure it rating would be above 80 at least. That I'm pretty much sure because the this base is above 11 weekly MA. High accumulation the right outside. Now, if you see a little bit here, the green candle, sorry, what do you call the blue candle? Or let me go to daily. Probably it will give more sense, right? So if you see here, so left side of the base, there is only one or two accumulation have one or two green candle, right? Most of them are red, but right side of the base, your number of green candle or positive candle improved, right? Your green and blue candle
Yeah.
improved, right? So that is what I mean. High accumulation is done, volume drying up on the right side of the base. That is what I meant. So when you seeing the brace is a sorry, stock is about to break out, your contraction should be minimal. Like the stock मतलब वो equilibrium position में पहुंच गया है जहां पर अब it can happen anything. Either it will go up or down, but it is about to happen very quickly. If it goes down, your risk reward is very favorable. Basically, you are risking literally nothing, 4 to 5% from this point. But the amount of money you can make is obviously a lot, right? Because if it goes upside breakout, a lot of things can happen. So that is one thing. Then above key moving average base, obviously above 11 weekly EMA. Pocket pivot, in a minute I'll talk. But if you see this green candle, basically those are the pocket pivots. Strong industry group, metal again coming back. A lot of not only this company but many metal companies are coming back. Again, this is one thing, like you should have a mechanism to identify strong industry group. I don't know which mechanism you use. I use trading view. I can show you if anybody interested, but have some mechanism to identify good industry groups from where you are able to trade it. Fundamental properties, the lot engineering result and all the stuff, amount of order book they have. So these are the few checks which I check. And see here right now I'm going to store, but moment I have this anything ingrained everything in my mind. So moment I see the chart, automatically everything get scanned, like 11 weekly MA, right side base, accumulation, RS. Like I don't have to go and check my checklist now. Like I already have in my mind that okay, I can quickly check this. So to coming back to your question, yes, this is the accumulation you are seeing on the right hand side, and volume contracted the positive stuff. Right? Any other questions?
Yeah, the strong industry group, Gaurav. If you want to show it on
No,
trading.
strong and steady group is nothing much. If you put any scanner, right, you do a download, put a pivot table, see which stocks are. So, for example, I've put some filter. I'll show you this filter randomly, but just download it. So this is even I am doing in the US stock also because US market I'm not very much well versed. I don't know how this economy works. India, bachpan se tha, so I know very well, right? But US stock somehow I'm not too much comfortable right now. So all I have to do is put a pivot on this one, insert a pivot. I have to make one this thing. What do you call it? So basically this, for example, if I just, you put a filter here, I'm in here, and you see which stocks or which industry is having a maximum number of stocks. You trade in those areas. So like industrial machinery is the highest, probably four. Four is motor vehicle, like auto OEMs. If you see, a lot of auto OEMs stocks are coming. So in this way, you will be able to identify the stocks before anybody will create a noise on the this thing. So hotel right now is a noise, but 3 months back, hotel was not a noise. Pharma right now is not a noise, though a lot of companies are coming. Like right now, it's a railway PSUs is a noise, whereas pharma is a probably the area where the momentum has started. Like, but a lot of people has not started focusing as of now. Although it started now, like in the midway area. So this way, like seven stocks are coming from the pharma. So in this way, I'm able to, basically you have to do the shorting and you have to find out like, okay, simple like if I, pharma is the one space I'm interested. Motor vehicle is one of the state area invested. A lot of financials are coming again. So hospitals again, Aster Apollo Hospital. Apollo Hospital is my radar also. So you can actually in this way you will identify some of the stocks. And this I do for US also. Like all you have to do is filter, identify 4, 5 or 6 area where the maximum number of stocks are there, and it means majority of action is happening or flowing money flowing is happening in that area. That is one way. The secondly, rotational graph you can use. I don't know if you guys know or not. I'm sure there is a free this thing version also. You can check that. But if you go to stockchart.com, right, there is option of seeing the rotational chart. So if I see the group India sector indices, right, in last not 1 year, let's say last 3 months, something like that. So I do use sometimes this also. So it basically shows you that where the stock is moving or which from where the money is moving, right? So for example, it has 4 quadrants. One is improving, leading, weakening, and lagging. So anything in lagging or moving to lagging is not a good area. So for example, private bank, media, CNX media, right? These stocks right now, like if you're a momentum trader, short-term trader, then this is important, right? So I'm not going to buy a stock as of tomorrow, which are in media or private bank. So because they are lagging or they are moving to lagging, but I'm interested to stock which is basically already leading or moving to leading. So something like PSU banks, metal, realty now moving out of leading, right? So earlier it was leading, but now it is moving out of leading. It might turn. We don't know. Money, मुझे नहीं पता कल अचानक से F5 में क्या कहाँ से कुछ आया and they will start putting money, hence it might go to leading. But this will give a small gist, okay, where to focus your, where to identify your sectors like oil and gas, PSU bank, metal. Metal is something I'm looking because it just started moving to this thing. Though basically high bigger this tail is, I mean, so higher the number of days for which a stock has been trending or index has been trending. So I'm not interested जब ये इतना बड़ा tail बना लिया है. It means the noise is already there in the market. I'm interested when the tail is shorter like this. IT, like CNX, IT, and metal. These two areas right now might be interested, which has moved from a weakening or media to lagging. So that is another way. Then in 2, 3 or more ways I use it. But hope it gave you just right. You should have some mechanism to identify such kind of groups.
Gaurav,
Thanks, Gaurav.
what way it is different from ride winner, where we are segregating the sectors and all?
Right winner,
Pulse.
frankly bolu, तो I have stopped using long back, Geeta ji. I mean, I used to use when I was joined this technical company. So I probably won't be able to comment. I'm sure Vivek sir might have put some good way. So if somebody using, feel free to comment.
Because
I
there is a
probably won't.
community pulse and all, no? So it is
The
giving
community pulse
quite
is a very small sample. The community pulse is like all the community member voting that, right? Which sector? That is what it is, right? Sorry.
okay. Yeah.
It's a very small sample. I mean, hardly and out of 3,000, hardly 100 people are voting, and out of which I don't know how many people have understanding of voting. First of all, like how
No,
many
but
people
that
do.
super strength, that option is there, no? That
Okay,
indicates
so
that.
sorry, as I said, I don't use it, so probably I won't be right person to comment
Oh,
on
okay.
that.
Okay. Because I found that it was in same line or
Okay, yeah,
group,
no, then definitely,
industry
yeah.
group.
Okay. Yeah, I mean, as I said, you should have one mechanism. Any mechanism is fine. As simple as that, you're following someone on Twitter, and if he or she is telling you that this sector is coming again and again, even that is also one of the mechanism. But one mechanism to tell you that okay, this industries are in trend. If I have to trade, I'll trade in this, something like that.
Thank you.
Yeah.
Gaurav, can you just explain once again how did you get that Excel industry group list? Probably I missed that.
Okay, no, so you just need to download the Excel sheet here. So whatever filter you put, so I'll come to this filter thing which I put to identify such stock, but whatever filter you have put, right? So it will throw you some list, right? Some stocks. Based on that, you have to identify which industry is trending in this. So what I do, I download the Excel from here, and then I simple put a pivot there. So if you cancel it, so if you go to the sheet, you just select entire table and you insert a pivot table here. So recommended or you put a pivot table, doesn't matter. I use recommended. And then when you do that, you go to the sheet here and you choose the industry and put it to the two. So basically, you want to see the count of the stock in that industry, right? So basically, that is what I'm doing. So I'm moving that industry into the value, which is a count of the industry. And row, of course, I want to see which are the industries. So I move that industry to row and count, and that's it. It will give me this table.
And this you do it every weekly or how is it?
I tend to do weekly. So for example, as you know, as a swing trader, I only take one position, right? I take, for example, ACE, Accent Construction. I have taken a couple of months back. So I only take one stock as my satellite stock. So I don't do it on daily basis until unless sell triggered. But I have awareness that okay, which stock right now performing. I keep on updating myself every 2 to 3 days or sometime weekly also. Or what it took hardly 1 or 2 minutes, right? Even while I'm in job and I work from home, so I can do that download and quickly. So I always keep myself updated, like which industry is performing. It doesn't mean that I'm going to take action tomorrow. It's just that if my ACE stock is not performing well and it hit my sell criteria or stop loss or whatever sell condition met, in that case, I will again, then in that case, I will basically scan the stock in those industries and buy that stock if my condition met. Otherwise, I'm just keeping myself aware that okay, कल को I shouldn't be got little panicky. Okay, market has gone down, what to do? So you should be have that awareness. Okay, these are the stocks or these are areas where the money is flowing. Okay, whether I'll take an action or not, that is different discussion. But hope that thing. So you can do on daily also, you can do on weekend. But I generally tend to do every 2 to 3 days or sometime, if I have time. When I was in India, right, I had a lot of time. So I used to tend to do this on daily basis also.
Sure, thanks, Gaurav.
Yeah.
Gaurav, can you explain how to put up that RRG? I think the chart in stock charts. I mean, how do we set Nifty? I don't see that as an
No,
option.
RRG. So if you go to relative stockchart.com, if you go to here, so in select drop down, you scroll down. India is one of this. What do you call option in the under that Nifty Sensex, and you have India sector indexes. So this one I chose. You can choose the time frame based on your whatever time frame you want to use. So last 1 year, what was the status? Last even 3 days, you can 2 days also you can check in last 2 days where the money has moved. So automatically in 2 days, and you have to change this one to let's say 10 minutes. So it will show you which are the metal in last 3 days or which are the areas last 3 days were the leading. So since market was little stagnant, everything in last 3 days were moving towards lagging or weakening phase, except PSU Bank maybe a little bit and media also started coming back. So even short term, long term, both you can check.
Thank you.
Yeah.
Is it a paid version or free version, Gaurav?
There is paid version also. I think you can use at least this for free version also. You can give a try. I don't know. I have paid
Oh,
version, so I cannot comment. But have a look. I think in free version also you can actually check this at least this graph.
In the free
oh,
version, we're not getting these options, the groups and the days and the top bar basically.
It needs a
Have you logged in?
subscription. Yeah.
Have you logged in? I mean, have you created your account?
No.
So try that first.
Okay.
Maybe try this because they generally give 7 days, 10 days, something also. I have premium version, but have a look. I'm
Sure.
sure in the free version. If not, then probably paid version.
Okay.
Okay. So let's quickly go to the pocket pivot and then we can have a little question. So this is very one thing which I want to talk about, important one. Basically, once you have bought the stock, right, you shouldn't be selling it in sold with a 10%, stock went 100%. That is a bad thing. We have already talked about never sell your winning trade quite early. So buying the stock, there are two things. One is pivot point and one is pocket pivot. So pocket pivot is basically buying the stock just before the base breakout happens. But before that, just give me a sec. Um, I have messed up the flow. So this should be Cooper. and then comes the characteristic. Sorry. So this I created yesterday only. So I might have been not in right senses. Okay. So what is first of all pocket pivot? Pocket pivot means obviously the institutions, HNIs, FIIs, they are not waiting for stock to break out and enter, right? The logic is simple. They need liquidity in the market. So if HDFC Bank have identified a good stock tomorrow, they need liquidity to build their position because they are going to deploy a 20 crore, 30 crore, 50 crore, 100 crore in one stock, right? So they need a liquidity in the stock. They need a supply in the stock. And for that reason, they want to accumulate the stock before the breakout has happened. Before the stock came into the radar of people, right? Before the demand has increased. So they want to buy the stock with an exemption. They are not doing a technical trading, right? They might use a technical tool, but they are basically identified the stock based on the fundamental parameter, and they think the stock will move, so they will start entering where the supply is high, because they want to accumulate a big position in that. Hence, this pocket pivot concept came in. So basically, it's nothing but a footprint of a big institutions, into especially in the base or uptrending stock, and that is what we want to see as a pocket pivot. So the like they you obviously, as I said, they cannot buy a breakout, and because supply contracts later on, hence they want to build the size they want to build, they have to buy a little early. This buying will leave a volume signature, which we'll see in a minute. Now, big institution can sometimes takes a week and month. This is important. So, and that is why the breakout happen and the stock keeps on performing well, because sometimes big institution cannot take a position in one go. So for very recent example is Ipcalab. Ipcalab, if you've seen, a lot of FIIs or DIIs are taking position, pharma. But pocket pivot has started some time back because they have started accumulating and it's continued accumulated, right? Pocket pivot has continued showing those signatures in that stock. So that is what we want to identify, where you accumulate, see that position happening. And why do you do that? Obviously, why do we good look for the pocket pivots? Basically, RR is very favorable, very good in sideways market, because most of the breakout fails in sideways market, right? So in that case, if you enter at the pocket pivot level, you will be able to make some money out of that trade or out of that stock, uh, irrespective of breakout has happened or not, because you have entered before the breakout. So as I said in the group also, it's good for the swing trade where people are looking for 8 or 10% of return in a short period of time. So if you're entered a right pocket pivot point, then you will be able to make 7 to 8%, irrespective of stock broke out or not. That is one thing, right? It's a basically quiet zone, less crowded. This is my most favorite. The less crowded, better it is. So it's basically this area. Sometimes patience will be tested. So even if the pocket pivot, right, stock might still consolidate, right? It still consolidate. If it hits a stop loss, best. But sometimes it doesn't. Like with Ace, it happened to me. I'll show you an example. So patience will be needed for that. Now, what are the characteristics? Let me complete the concept and I'll go to examples and I'll discuss that. Okay. So one is daily chart preferred, because pocket pivot, because the volume signature is visible on the chart, but it's not that high that it will be visible on the weekly chart. Hence, daily chart would be required for this. So in India market, that's why I don't do it. I do in US market. But in India market also, we'll take a couple example to show this. Okay, so that is one thing. Second is thing is that proper base breakout is important, or proper base formation is important. You cannot do pocket pivot trade just because you have learned the concept, but you don't know all the nitty-gritties of the concept. You cannot do this trade in the downtrend, or stage 4 stock. You should be only doing when the stock is in a stage 2. It simply means that stock is already established its trend, but still some institutions are interested, which is very positive sign, and hence they are still accumulating that stock. So that is what we are seeing here. Stock fundamentals should be good. This goes without saying in every of my presentation. This thing will come where that your fundamental layer has to be there. It's as simple as that. You cannot trade in anything in every stock. Every stock which you see the pocket pivot, it doesn't mean it will be a good pocket pivot. You need to do it in the good, strong fundamental stock. And it's not me. I'm saying you read any techno funda investors. I don't know any option or trader, option or future guy who have been successful in the market. At least I personally know. I know, but a lot of people who have been very successful in the market on the back of techno funda, momentum, value investing, growth investing. So my logic is same. Jahan pe people are higher, number of people are higher who are doing this fundamental as a layer. Why not you and I should do it, right? Like instead of just looking at the technical, just add one this layer and it will increase your probability of winning high. The day volume should be larger than the highest trader. So this is one important parameter, which says your 10-day prior volume of any down days or red days, right? It should be higher than less than the today's date. So I'll give an example before I go ahead for this particular statement. What I mean is, for example, so you don't have to do that. You have a ready-made indicator, which I'll talk about. But basically, what I'm saying is something like this. See this candle. This is a pocket pivot. The base breakout hasn't happened, but this is one volume signature of the institution. Obviously, 3 million Lloyd Engineering stock is not something, some Ramesh or Suresh is buying in some area, right? Sitting in area. It's some FIDIs, HNI is buying, right? So buying. So this is something I want to see where the volume of that day should be higher than the 10 days down day volume. So if you see any red candle, okay, let me move this to a little up. Okay, so what I mean is, if you see this green candle, right? If you see the prior days of down days, basically red candle. If you see this red candle, this red candle, this red candle, this red candle, this contractor candle, uh, the the volume of that day should be higher than that. So very simple. Okay, then pocket pivot sometime coincide with the base breakout. So sometime what happens is pocket pivot won't come before the base. Sometime it coincide with the base breakout. That is good, but in that case you should see the higher volume percentage. So for example, if just an example, if this stock, Lawyers Engineering only a stock, if this stock didn't show any pocket pivot here, let's say, although it has shown, and if it's showing the pocket pivot at this candle, right, where the breakout is happening, in that case I want to see this particular volume signatures to be higher, more than 500, 600, 700% kind of stuff from the average day. So that is one thing I want to see. So that is the second important characteristic of the pocket pivot. Third is do not
Yeah,
buy.
Gaurav.
Ji.
Sorry to interrupt. Actually, on this volume, many times I saw actually this high frequency trader like this Graviton or this other
Correct.
people, no,
Correct.
they buy and sell for 5 or 10 paisas, and it
Correct.
creates a huge volume.
Volume. Correct.
So how to deal with
No,
it
no,
actually?
yeah, I agree. So that is why
Yeah,
one of the Twitter and the Gil Morales only said that sometimes this pocket pivot will be a tricky one. So as I said, right, you cannot trade in every stock. As I said, you need to have a other filter. Like I have talked this entire presentation, right? Like canceling parameter, your good trending stock, good ROC, good excellent earning fundamental parameter. You have to club the pocket pivot with lot of other layers and then trade a pocket pivot. Only just you saw the pocket pivot, you cannot trade. So obviously that thing you cannot identify quickly. But the one thing I've seen, one way to identify that, like, stock didn't move although the pocket pivot happened. So for example, here when the pocket pivot happened, 4% stock movement has happened, which is positive. But for example, sometimes you see the lot of big volume signature, but the stock movement, the price movement in the stock is negligible. Basically, it form a kind of a dozy candle. Hope you know, right? This ऐसा करके यहीं पे खत्म हो जाता है, open and close within this,
right.
right? It moved up. So that is something, another way to identify that, this not a healthy candle. It means some intraday stuff happened. So probably this is another way you can check, but so it's very difficult to do it all the time. So I tend to focus on the stock which is fundamental, good sectoral tailwind, good positive earning growth, lot of beat candidates, and then I see for good pocket pivot. In
Yeah.
that case, that increases the probability of trading in that stock or winning in
Yeah.
that stock.
So you take a trade on the same day of this
Pocket, I'll
pocket
talk
pivot or
about, yeah,
on the next day?
no, I'll talk about a few examples of how I trade and how these people have traded. So hopefully that will give you a brief view
Yeah.
of that.
Okay. Thanks.
Okay, don't buy the pocket pivot if a stock is in downtrend. It goes without saying. There's a trending concept. So I mean, the stock which are trending, you have to do that this concept in that. So anything below 50 DMA or 200 DMA, you don't do that. You can do only when you are doing a bottom fishing. I'll take one example to show that. But again, I hate bottom fishing. I don't like to do, especially in especially in a bull market or trending stock, because its probability of winning is there very slow and very bad, right? So why do we want to do that? Some pocket pivot may occur after stock is extended from the base. This is important. Like some stock institutions are so excited or so bullish that even the stock is extended, they continue buying that. I'll show you a couple examples. In that case, do not get excited, enter. End of the day, your RR is still important, your risk reward is still important. So if you enter into the stock and next day somebody short it or somebody goes bad, right? So it's basically become your bad trade. So every time you have, so there is a condition there, if only do the pocket pivot when you see around 10 daily EMA. So whenever you see the 10 daily EMA and pocket pivot is happening around it, basically your candle is touching 10 daily EMA, then that is a correct pocket pivot. Not every pocket pivot is a pocket pivot. So for example, if I have to show you Wari, so Wari was extended for a while from the daily EMA, right? But if you see the accumulation thing here, if you see the green candles, it is happening here, 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 even at the initial. So I'm not trading taking. So if this candle is also a pocket pivot, this candle is also a pocket pivot. I'm not trading here. My idea is to trade somewhere here or probably here, jahan pe it's very close or probably touching your daily EMA. The best would be here. I'll talk about how to do that, but I'll just in a minute. Yeah. So that is the example. Um, yeah, this is important again. Highly constructive base, right side accumulation. No, virtually no selling volume. And if you see the pocket pivot, I'll show you a couple example of this also. Look for leaders on the market for the pocket pivot. Try to find the characteristic of the stocks via EMA. That is important. Weekly chart to identify the base, and don't do the bottom fishing. If at all you are do the word bottom fishing, then use the right pattern to do that. Okay. So uh, okay, I'll take an example. But just to summarize, this is what they how you. So for example, okay, this is summary something I have created out of this reading entire book. So if you want to use a pocket pivot, this is the way I use it. It's totally up to you if you want to use it or not. So first of all, I identify a quality base. First of all, it is for swing trade. Okay, so I only use pocket pivot or relevant for me pocket pivot for swing. So as I said, I use trade in US market swing trade, not in India. In India, I only do for one stock that goes at 20% satellite. So I use it for that. So this is for something swing trade where you want to capture 10, 12, 15% of return very quickly. Sometime 100, 200 if trade acted well. So this is what it is important. So you have to first of all go on weekly chart, identify a quality base, and then based on the TV scanner, I'll show you in a minute. The For me the quality base would be best with the flag pattern. If at all I see this is the most tradable and best pattern I personally feel, which is very rewarding. So this is something I see, or sometime cup and handle also if at all you want to see. So these are the two patterns which I am very much on. Third, sometime ascending triangle or what VCP we call it. Someone is okay. Okay, so ascending VCP or whatever. So then you after that you see the tight consolidation, contracted volume above 11 weekly EMA. Once you have seen that, canceling parameter you apply all the fundamental canceling parameter along with the RS and all the stuff. After that, I'd find the pocket pivot, look for the RR, find the again you need to cannot buy only based on the pocket pivot. You need to find a support with some other indication like some other indicator also. So this is important. And once fine, simply trade 10 DMA. So let's take an example. One trade which I took was SMCI in US. So I'll show you an example of SMCI, but just for the concept purpose, it doesn't matter what trade we're doing, right? So hope this chart is. Let me go to the US. This thing. Kishan, can you mute? I think someone is. Okay, so you see, I have gone back in time, and basically let's do this. So how this pocket pivot or base thing? The first thing is basically you have to identify a strong weekly base, right? You have to find a strong weekly base. So we'll wait. Now, this is where weekly breakout of first 52-week high is formed, right? So as I said, the strong how to identify a strong weekly base. I've already mentioned in this chart pattern. These are the few parameters I look for, or anybody, if you read any possible book you can read. I've read more than 15, 20 books on this. So I can give you like कहीं भी आप पढ़ोगे यही मिलेगा summary में. That I guarantee I can give you. So this is what we are talking about. This is the 52-week high candle we are looking. Now this is where the breakout is happening. Now I go to the daily chart. Sometime if I find this base, constructive base before, no, this is far better. So if I go to the daily chart now, so this is where I'm buying, right? So if now this is the pocket wave. So by the way, this is one indicator by Trader Lion. So that has a mini volume signature. Now let me explain you before I talk about it. So you can change the colors, doesn't matter. So let me go to the volume. So right. So basically when you see this green thing, right, that is the pocket pivot, which is relatively high volume. based on the past 50 days. So here I'm not looking 10 days. I'm looking from past 50 days. Now this parameter also you can change. You can change it to from here. You can change it to 50 to 10 or 20, whatever you want to do it. I want to see anything with the 50 days. That will give a more better sign. Like last 50 days में कहाँ पर अच्छा volume है. And along with that, this particular indicator has a one positive side that it also look the candle also. So if the candle body is more than 50%, then it will basically create a pocket pivot. Otherwise, it won't create a pocket pivot. So that is also a positive thing about this indicator. So I use this. This means basically relatively low volume or contracted volume. Means it's not a relevant volume. So don't take an action on when you see the volume here. Is right. Up color, simple red and this green and red color. So that is the simple parameter, and these are the parameters you can do or check whatever. Now, so basically this is the pocket pivot candle, right? So you can go back and you can check. So basically from last 50 days, whatever the red candle is was there. This is one of the biggest candle, which you see the based on the candle strength, right? If 50% of body is there in the candle. So basically this will become your pocket pivot candle. So your entry should be somewhere around this. So moment I see it here, now if you see we are all now right now we don't know whether the breakout will happen or not, right? Right now we are in this situation. It's basically if we extended trend line, it's basically the trend line breakout is about to happen or already happened if you meet these 3 4 points. So this is where the breakout is happening, right? So this is one thing. But as I said, if there was one point which I said, right, support it with some other indication. So you use any other indicator. I use it my 52 days high, right? So this green candle is 52 day high. That is something kind of a confirmation this thing for me, right? So sorry. So this I say, right? Support with any other indication. You use any RSI, MACD, any buy signal, sell signal. It doesn't matter. Anything you can use. But I saw the pocket pivot. It doesn't mean it's a buy thing. I want to see some other indicator also signaling that. So my RS is also signaling that. My 52-week high also signaling. So somewhere here in between these two candle or somewhere around this candle, I should have entered, right? And after that, a pullback is must because pullback will happen, of course. Now, for sell condition, I'll eliminate for the swing trade. Now, whatever sell condition you use, it doesn't matter. But sell condition, I'll talk in a minute. The pullback is done and then it moved. So this is the breakout has happened with a massive, so highest volume ever. So this SMCI volume breakout has happened with highest volume ever. The HVE means, So, so this is where the breakout has happened. Then pullback happened. After that, you just need to trail 10 daily EMA. So you don't have to do anything because you're swing trader, right? You're not here to capture the entire move. You are here to capture the good portion of the move, that swing. So, and the majority of the support mostly happen on the 10 daily EMA. That is a proven fact, like 10 weekly EMA, 10 daily EMA, that is something like that. So you all you have to do is do the 10. So you will see the RS, roaring RS, and after that stock has moved. So this is one of the so in US market, I almost go concentrated. I have only two stock in my portfolio. I go 50%, 50% into both the stocks. So that kind of concentrated game I'm playing there. It almost moved my portfolio within a few days, actually more than 70-80% because I have 50% allocated in that. So this is one thing you can do. So what I do, basically, you identify a strong base with good RS where the breakout is about to happen. And the best part is if I entered here, right? My R, if you see, if I entered between these two candles, if you check my reward risk is hardly 5 or 6%, less than 5% actually, around it just contracted around here. So this was my entry. If this blue line crosshair line, which you see 325, this was my three. Yeah, this was the entry. So hardly 5-6%, right? That is the risk I'm taking. So that is the best part of pocket pivot, where versus when the breakout is happening or about to happen, if you're entering here, your risk reward, if you're not watching this stock, then your risk reward is obviously out of favor, right? So I'm not sure my trade will succeed or not, but that I'm sure that I'm not going to lose more than 4 or 5% of stock, my trade, right? So that is something important which I'm looking. So this is best, this thing. Some Indian example, I'll take ACE. ACE was making a small cup and handle here. I think it was in November. Yeah, this one. So it was forming a small this cup and this handle. So I got excited and I entered little bit here. So in dono candle ke beech mein, sometime around October, November, if you see my Twitter, I've mentioned sometime in November I've entered, right? And now let's go in daily chart. So this was again a swing trade on the pocket pivot. So I got excited somewhere here. So what happened is, let's go back in time. So this was the base for formation, that cup and handle weekly I've shown you, our 11 weekly EMA. So everything was positive, result was good. Fundamentally, all the infra is doing good, strong sectoral tailwind. Result was anyways good. Everything was positive, right? So that point of time. So all the checklists which I have given here as a characteristic, you can check, or and it was satisfying. Now, if I just quickly go ahead now, so I got excited because this was a RS. This was this pocket pivot I was talking about. I entered. I entered actually here. ये ज़्यादा जल्दी move कर गया, but I entered somewhere here, this point of time, because I knew that, yeah, and I was aware, so it would consolidate, but I was happy with that consolidation. But I didn't realize that consolidation was too high. So I told you, right, that is one problem I have. So I'm very stringent with my 10 swing trade, with the 10 DMA, that I will only exit when the 10 DMA will breach. So after that, the stock never breached 10 DMA, but it never actually it didn't perform also for a while. For 2 months, it didn't perform. So after that, you see the volume is little very much contracted, and it will just keep on hovering around 10 DMA. So this time was a breach, but with a negligible volume, so I ignored it. And after that, it basically jumping around the 10 DMA. That's it. And many pocket pivots you were saying, and so basically I didn't exit it. And then it further broke out somewhere here. So recently before the result or just after result, the stock up hit, I think, 15-20%. And uh, so see, ideal situation, ideally, this is something I cheated, frankly speaking, because I should have exited for. But ideally, I have made almost 7 to 8% here itself, right? So I was actually thinking of exiting, because it was consolidating for a while. But even if I didn't exit it, it made money. But the idea is that you trailer your 10 DMA as a swing trader. If you're a swing trader, you just trail your 10 DMA and have a rule around it. And the moment it breached 10 DMA, you exit. If it hasn't breached, then you don't exit. As simple as that. And this is what they even sell rule for them. So I'll quickly explain their sell rule. So they have two sell rule for 7 week, or that is 35 days. For 35 days, if the stock respected 10 DMA, then sell as soon as 10 DMA violated. And if within the 7 weeks or within 35 days, if a stock has violated 10 DMA, then wait for or trail 20 or 50 DMA. So what they are meaning is, they have 7 week rule or 35-day rule. If within the 35-day stock has already violated after entering the pocket pivot, if it violated the 10 DMA, then you wait, then basically look for support for 10 or 50 DMA. 50 is nothing but 11 weekly EMA, right? And everything is happens around here. But this is basically last support zone. Once this is breached, stock might go into the stage 3 or stage 4. And if a stock has respected for 35 days 10 DMA, then you just continue. And the moment that 10 DMA violated, you exit it. So that is what it is, right? This example. Now, I'll just quickly cover one gap up buying. Gap up buying, again, not too much detail. Basically, let's talk about the some stock because of some catalyst, right? The gap up happens. It could be any reason, but the fund earning is the best reason. I discussed in the PEAT concept, right? So there are various ways to do that. One way is to basically wait for pullback. So for example, in US market, a lot of gap ups happen, and it's big gap up happens. So if you see this and this, right? So almost in one day, Netflix, it's a mega cap. It moved almost 10%. So best entry point, either you enter it here within the same day, because this is an earning based catalyst. It will be a positive catalyst, and it will continue. और just wait for stock to pull back to 10 DMA. Now your risk reward is favorable. अब यहाँ से आप lose कुछ नहीं कर रहे हो, but if your stock moves up, you are making a good huge money, and you see the volume contraction here. So this is the best way to enter into the gap ups. You check any stocks, even in the past, if a stock is gapped up, right? So for example, here, if you see 18th October, the gap has happened, almost moved in 16% in one day. Don't get excited, wait for pullback, because after gap up, pullback is mandatory. Pullback is will happen. So pullback का wait करो आप, wait for this 10 DMA to be touched, then you enter. In that way, your rule is to sell when the 10 DMA is breached. So your risk reward is very negligible, hardly 2-3%, but the profit is 15-20-30%. So that kind of swing trade you can capture. So that is cap buying, and this is how they made the money. But let's do any Q&A for any questions you have, any or any examples, better examples you have, we can discuss or check actually. I have many examples, but one Wabo Global, I see bottom fishing cup.
Sir, will you share this PPT with us, sir?
I'll do that.
Thank you, sir.
So Wabo Global, if you see, this was a stage 4. This was forming a stage 1. If you have seen the stage analysis which we discussed sometime in Stan Manston book. So this is stage one, and so this is where you got in should get interested because इस जोन में stage one बन रहा था, तो यहीं पे आपको pocket pivot ढूंढना है because stage one means the accumulation has started. It's no more in downtrend, right? So now if I go to that zone, this is where you have to find the pocket pivot. Now this was the first pocket pivot where the stage four has ended. So this is one. But I would want to see some contraction or right hand side with along with this 52 day stuff. So यहाँ पे आपका basically start हुआ है सारे accumulation. If you see the green candles, this is where the accumulation is started. Now, whether stock will perform or not, that's a different discussion. But this is where basically bottom fishing. Bottom fishing means you're buying a stock here. So you have a huge run up till even if it touches this, almost 129%. But the problem with this bottom fishing, there's a lot of resistance here, 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 here. So a lot of resistance are there. So every time it reaches this zone, probably consolidation will happen, or it might if market is not acting well, then it even reverse also. So that is the only problem. Hence I prefer to see something like this, where the stock is trending, and then you find a pocket pivot in these areas. Okay. Uh, just let complete this and then like Q&A. So how they made the money. So Chris Kacher basically made 18,000% return. So put things in a perspective for 7 years. I mean, for 7 years. So basically, if you have invested 10 lakh, almost 2 crore in 7 years. And similarly, Gil Morales converted 10 lakh into 1.2. So they made on the back of, I'll talk about it. Basically, these kind of return. Now, what they highlighted few pointers. Basically, your stock selection filter should happen on the back of canceling. That is unavoidable. Like your stock should be the strongest stock in the strongest sector with the strong RS with a strong fundamental. That is goes without saying. I mean, if you don't have such a stock, do not trade it. Now, wait for your stock to come in that zone and then trade, right? Start with a weekly and then look for the strong base, as I discussed already. And this is important, right? They played on the back of massive sectoral tailwind. So I don't know. I wasn't there at that point of time. But basically, in 98, 99, there was a massive dot-com bubble, right? Which has happened. Like a lot of people made money. So this was the statement he said, right? It was rather frankly, the size of the wave I was riding and the dot-com bubble bull market October 19 was so high that as a wave of epic proportion. In simple meaning, in simple word, basically the wave right now which we see in PSU or in solar renewable space, right? The wave is so epic that in any and every stock is making 15, 20x, 30x. So similarly in that wave itself, they did this return. After that compounded very okay, like 18, 17, 20, 80%, right? So that is good again. But from the if you compare with this return, it's okay, right? So what they mean is this was so huge that I mean at certain point of time, I think he said right, he was actually almost 150%. He was they used to use a margin, of course, that's why they achieve this return. In US market, you have a option of using margin even in the cash market. So they used to have a concentrated bet and 150% of their account in one stock. So in Oracle, I'll show you Oracle when Gil Morales traded because that's interesting stock. So that time Oracle just started. It was coming from its IPO base actually. Mm. Mm. Is it Oracle? I think 90 base quick. किस ईयर में किया था इसने Oracle ने September 1999. Oh yeah, let's go there. Yeah, this was the base actually. So on weekly chart, this was the base he was actually looking at. This was the stage two. This was the base. September 99. Yes, exactly. This was the base. And after that, if I just highlight, if I go to a daily chart, you will see the pocket pivot. So stock will yeah, that's the problem. Trading. Right, September. So this was the base on weekly, which I showed you. And this is where the Huey stat said that this was the pocket pivot he identified. He took a position somewhere here in September 9 September 99. No, I think something is wrong. So he took around this position and almost 102% this document. So he was almost more than 150% of account was allocated to in that one stock. So with that kind of return, the compounded very quickly with leverage and all the stuff. So that is, and similarly eBay also. eBay was coming with its IPO base, I think, and October 98, and then I think eBay. Yeah, EBA was IPO base. So this was the IPO base it was coming on. It gapped up. He waited for this, and then 98 he allocated big, and then after that he just trailed this. So this black line is your 50 DMA. This gray line is your 10 DMA, and then he trailed. I think this stock went up of almost 100 to 100 or some percent after he took a trade or something. Yeah, 6x actually. So these were the few stock which was there very these were the many stock they have discussed if you go through the book. These were the two biggest stock which they traded at that point of time. So this is the critical. When most it's simply matter of finding the proper low risk entry point, paying close attention and watching proper secondary buy or add point. Concentrate your position, letting the market take care of the rest. As simple as that. Like this bull market, I frankly think even I have wasted this bull market because I could have gone more concentrated, probably 7, 8, or maybe less names. Uh, okay, we'll wait for the next bull market. But basically, the more concentrated, higher the impact on your portfolio, right? So that kind of, and then only you'll make money. Otherwise, it's safe money and it's fine. Risk lena padega if you have to take a big this thing. And and after that, you just have to latch, sitting more, thinking less. That is the most critical ingredient. So you don't have to worry much. If you have allocated the stock, all you have to do is wait and make money out of it. That's conclude the presentation. If you have any questions, any examples to discuss, I'm happy to discuss. But hope a little bit of pocket pivot and some of the concepts might have helped you.
Sir, would you recommend any book or something which teaches about canceling?
Canceling Prabhaji, I have already discussed in our many times. I think जो पुराने बंदे उनको तो रट ही गया होगा. We have discussed lot of many times canceling. Canceling is a book by how to make money in stocks by William O'Neill. That is a book name. You can read it. Read it 10, 20 times possible. And we have already done a session. So if you go to book club recording, you'll find a video there. We have already done a book discussion on that.
Thank you, sir.
Gaurav, on selling, if you see this Wari renewable chart,
Mhm.
yeah, now it started hitting lower circuit. So where we can put this trailing stop loss?
Circuit may you don't have anything to do. I mean, you have to just wait probably.
No, I
But
mean, on this lower circuit, we need to buy it or?
no, don't buy it, of course. Don't buy it. But it will stop at 11 weekly EMA. It should stop. If it doesn't, then you have to wait it. But considering this thing which
Yeah,
we have, that will should stop at
because
there.
okay. Because last time when it started hitting lower circuit, I think 2-3 days, then I sold it, half of the quantity, and after that,
Mhm.
I think it moved 70-80%.
Yeah,
Yeah.
Vari is very strong. If you see the fundamental, if you read about the company, it's very strong. So don't sell it unless you're any sell criteria triggered. But I doubt for anyone, I mean, who is tracking or is, I mean, nothing has happened. Obviously, it's extended. It got extended here itself, but it had so massive sectoral tailwind or as well as a earning catalyst that peed thing, right? So it performed well. So I'm sure it will stop at somewhere 11 weekly MA.
Acha.
If it doesn't, then it's fine. We'll see what to do. But right now, I'm not too worried. I mean, I knew that it will happen, so I sold some of them over here. Like I decreased my allocation here because we extended, right? So I have to book some profit there because it will pull back. So I sold little bit when it was hitting upper circuit. Now you
Okay.
don't have chance to sell it, but I think it's worth holding.
Right.
Anything from the book perspective? Any questions? Anything anybody wants to discuss? Okay. So nothing, then it's very good. One TV scanner which I was talking about. So you can use it something like this. So as I said, right, base is something you have to look. This is the one where you can check, where you see the relative volume. You can identify the trending stock saying that if exponential average is greater than 200, 50 again 200, and your price should be over 200. This is something you can put. In this way, basically, the before the base breakout happen, you will be able to identify some good stocks, or maybe within the base. Like so, something like Apollo Pipes. Right now, yesterday it went something good return. So something like this. The base is contracting. It's almost about to break out, and you will find these stocks over here. So if you see the on daily chart, it's almost a pocket pivot form, right? So some pullback, and it will give you good return. Okay.
You on railway stocks like Ircon or the likes RBN and then.
Ircon, everybody is trading. I mean, Ircon is very noisy trade, so I don't know. If you want, you can trade it. I don't know. I do not track them. Ircon, these stocks right now it's very noisy, so it will be very difficult to trade. Ideal position would be somewhere जहाँ पे ये base phase बना था, yeah, this bases and all. This was the right position. Right
170.
now it's very extended, yeah,
Yeah. Okay.
at least from the base.
Gaurav, which is the volume indicator?
Volume indicator, if you search by trader line enhanced volume, you'll find it.
Trader line.
Yeah, trader lines. Trader space LION apostrophe S.
Okay.
Gaurav, on this book, I think they don't talk about the valuations.
So these are the techno funda books, Nitinji. They don't talk about the valuation. Valuation is something you have to build. You read Peter Lynch book that will give idea, or you read some good valuation book. So because it's a techno funda concept, right? So they won't talk about the valuation.
Gaurav, your
Okay,
view on stop loss for Praveg and Titagarh in the down market when the mid cap and small cap go down, the sharp actually downswing, and then do you exit? I'll say, or you wait for the closing weekly.
no, I wait for closing weekly most of the time. Uh, Unless the volume is too high on that day. So, for example, Pravik volume was high because of extended. But if the volume is contracted, and then I don't exit. I wait for the weekly close.
Okay. And Titagarh, same because it
Same
is,
concept. Titagarh, I don't remember. Titagarh, you asking right now?
yeah.
Titagarh is almost breaching a 50 DMA with decent volume, so there is not a contracted volume. So I would be a little cautious here. Uh, and also the results effect wasn't seen. I think result was good, but since it was already discounted or whatever, uh, I saw somebody in the group also saying कि कल ये 10 20% of circuit लगाएगा. But after that, his stock went down. So the ideally you should be not excited just seeing the result. The validation of the result should be seen next in the chart also. So if you don't see that validation, then it means the either it's discounted or already it's people are not expecting some great result out of. I mean, people it is not as per the market expectation. So Titagarh, I would be cautious. Although on the weekly it's little contracted and taking support of week 11 weekly MA, so that should be fine. But let's see. Next week or probably another 2 weeks would be crucial. It should jump up from here. If it doesn't jump, then we should be cautious.
Now, only on the volume part, general question is that if the volume in the first half an hour or 1 hour of the trade is more than 50%, whether it is downside or is there any indication that okay, the stock needs attention, or if you're already holding it, needs a sell? May I'm
I'll
talking?
tell you.
Yeah.
So I understood the question. Basically, I don't, frankly speaking, on day to day, it's very difficult to track all the stuff, right? So आप मत देखो. I mean, daily percentage मत देखो, unless
Okay.
your stop loss been triggered. So that is you can't say. For the moment you take a position, stop loss triggered, you exit. That is okay. That's different. But if you made a good profit out of it, then it will be very criminal to sell it very early, right? If a stock is something you have bought at right position, so best not to see on daily chart with this thing. Wait for daily close because like Silcher I remember, right? Silcher से if you go back 3 months पहले एक कैंडल बनाया था जहाँ पे it went down 9% in it that day morning. I wasn't up. मैं 6 बजे उठता हूँ UK time, which is already 11:30 in India. वो स्टॉक ऑलरेडी 9% जाके अराउंड 12 बजे वो पॉजिटिव 2% पे था. You see the volatility which happened in it that day, right? Like it basically shake out. जहाँ पे a person has to enter, he wanted to have a liquidity in the market, so he brought the stock down 9%. He grabbed that shares and the stock went up to 2%. So अगर आप उस situation में होते तो basically you're selling that stock in loss, but after that stock has moved more than 5x or 4x actually. So that's my point. Sometime on daily chart, if you are too cautious, until unless you are very intraday trader, right, which will make sense these falls. Otherwise, sometime you will be shaken out very quickly.
Okay, okay, fine. And that's one more general question is that let us say once you've taken 1% position, okay, on a stock which you have identified fundamentally and you are waiting for the entry. Now, during the market, it is actually, it's corrects. Now, is it a good idea to actually pick up that time because you are convinced with the fundamental prospects of that stock? I'll just give an example of ACE or whether it is Benares at times. So, is it a good idea to actually add more or just do weekly or I'll say tranching on a regular
I
basis?
think weekly tranching bounce is fine because you see, irrespective of how good fundamental is, sometime market knows. Always आप ऐसा सोचो ना कि you are the dumbest person in the market, right? So, and someone better knows better than you. When I know I am the dumbest person in the market. I know कि कोई और अच्छा जानता है. वो chart पे visible होगा. That will be visible on the chart. And hence the logic is let the chart show कि okay, fine. The chart is saying that you exit, then exit. If chart is not showing not exit, don't exit. And same logic for adding the tranches also. So I add tranches when the bounce back happen on the 11 weekly MA. So 11 weekly MA where the accumulation of the most of our 5IIs and DIs they do, right? So when the bounce is happening from that 50 daily MA or 11 weekly MA, that is the point I add two like along with them. So that makes sense क्योंकि वो वहां से jump कर रहा है. So I got a discounted price, right? Because from whatever the price it was, it got corrected to its 11 weekly M, and after that it jumped. So that is one thing has happened. So I got a discounted price. But when it is going down, right, try not to average down. Although though you are convinced with the fundamental of the company, uh, until you know very well about the company, you know in and out or something, you know very well. Which is which is rare. Nobody knows in and out of any company very well. So better to play a probable game, saying that okay, I might know, I might not know. So I've already have a position 3% allocation in that. Now it's going down. Let it be cool down. Let it bounce from 11 weekly MA, 50 DMA, some rule you have. And the moment it bounce along with the DIS and FIs, even I will land something like that. And now you can use your pocket pivot concept also if you want.
Yeah, thank
Like the moment you see the green candle on that bounce on the 50 DMA, add it. The best part of the pocket pivot is
yeah.
right, like you will see the stock of the pocket pivot when the stock hasn't moved more than 5-7%. So वो 2% ही move किया है लेकिन pocket pivot show कर देगा. So in that case, that is a very positive sign. If I could just quickly share my screen, I'll show you that uh, HSCL. HSCL right now is very beautifully like so it's a flag based pattern on a weekly chart. I'm tracking very closely. I will enter. So if you see, this was the move which has happened very nicely. On weekly, it's formed almost 5 weeks of base very beautifully. Now let me go to the daily chart. If you see the volume here, like it's already gone, almost gone. Accumulation has happened massively over here. A blue green candle, lot of accumulation has happened. Now it's almost gone. Almost now this 2 days market corrected, stock corrected. But the moment I see the green pocket pivot, I will enter. I have to sell ACE to enter into this as a swing trade for me. But if ACE won't perform well or it could pull back, probably I'll sell ACE or I'll enter HSCL. We'll see. But that is the thing which you have to see. You have to keep your watch list ready, and when so even it's going down, I'm not buying. Even though I have convinced with this carbon stuff and all. But the moment it will bounce with a pocket pivot, I'll enter. So something like that.
Okay, got it. Thank you.
Thank you.
Is there any indicator to identify these pocket pivots, Gauravji?
Yeah, this trading view line which I said, right, that is the pocket pivot no, volume. So pocket pivot is not a point. It's basically the volume. The pocket volume will tell you the pocket pivot candle. So that volume green candle which you see, right, as I showed you, that is the basically pocket pivot volume. Now not all the pocket volume you can buy directly. You have to layer it with the fundamental parameter
Right,
along
right,
with the
right.
base formation, right, and contraction and all the stuff.
Okay. Thanks.
Yeah. Gaurav Pandri here.
These minutes.
Yeah, so I have been a fan of you. So thanks for the PEAT session and all this. So we have been learning the entry, fine-tuning our entries and exits for so far. More on the preparing our own stock universe, right? So far we have been going with names here and there. I have been going. Okay. So to come up with our list, right? So this is the end of earning sessions, earning results, right? So we pull out, use that, and then prepare our own list of universe of stocks. And then do you also go with like, I mean, you merge like from TradingView and MarketSmith and then Screener and merge it and prepare your list for the next quarter. And you said that you will be taking trades only for PEAD as well as the swing trades.
Correct.
Is that the right understanding?
That's correct. So basically, my 80% or 75% portfolios allocated to PEAT candidates, and the rest 25% in one stock, that is swing trade, which I do. So the scanning will be different for PEAT candidate versus scanning of will be different for the swing candidate. Swing candidate, I'm looking at massive trend, right? There should be massive trend, and there is small pullback, small base formation, or just a base formation has happened, and then I will enter. So in both the cases, I'm looking for the sectoral tailwind and fundamental of the stock and all those stuff, right? But if I don't see this stuff, then I'll basically don't buy the stock. Now, Pete candidate, I wait for earning season to end, and sometime within the earning season, if the market behave like market अभी बहुत heated है,
Mm-hmm.
so I'm not, even though I have identified a couple of Pete candidate, I'm purposefully not entering only because I know very soon my SL will hit. So because market is very much heated, right? The moment थोड़ा सा market calm down होगा, little bit relaxation आएगा, लोग अपने अपने दुनिया में जाएंगे, then I'll enter into those stock in those Pete candidates. So that is my point for the Pete candidate. But your scanning should be different. Your that is simply based on the earning, massive earning, and then your rest fundamental parameter, which I keep on discussing, like base and all the stuff, 50-week high. Coming back to the swing candidate, you should have a different filter. Like right now, I just showed you in trading view, right? That scanner which I
Right,
use.
right, right.
So I
Yeah.
use that. I use uh, so I sometimes use charting जहाँ पे वो 3 week का consolidation दिखाता है. So I have created where it basically do a 3 week consolidation, right? The stock is just going through. So
Mm-hmm.
sometimes those stocks basically come with the pocket pivot very quickly. So that is something you can see. So consolidation हो रहा है 3 weeks से. So I look for the flag pattern. So already movement has happened 50-60% in few days, and then the consolidation happening for 3 week, 5 weeks. Then here, if the moment you see the this red the green candle, you enter into those stock. Power Mac we did, right? So
Mm-hmm.
so those stuff. So for that your scanning should be different, and for this your scanning should be different.
Okay.
But yeah,
Yeah,
I
one.
agree.
Yeah.
Matlab, you should have a very
Mm-hmm.
fixed, defined process of scanning also. Like, and be aware that you cannot identify every multi bagger in your scan. Like, एक होता है, एक feel होता है कि अरे यार
Mm-hmm.
इसने ये पकड़ लिया मेरे scan में क्यों नहीं आया? Um, don't worry. मतलब be confident that whether your stock which you are seeing, um, are you able to execute that properly? आप ऐसा समझो, right? आपका portfolio अगर उस stock से 2% भी move कर रहा है on daily basis, that is a very positive stuff if you do the compounding. And obviously it won't happen on daily basis, but that's the idea. Like your stock should be, you should be confident on your watch list. बाकी तो
और
दुनिया पता नहीं
मैक्स वॉच लिस्ट में कितना होना चाहिए? मैक्स 180 to 100 और नॉट
your
मोर?
red hot core watch list shouldn't have more than five. Like अगर मुझे कल swing trade लेना है
अच्छा,
तो I
एंट्री
right
के
now
लिए नहीं, आई मीन ओवरऑल यूनिवर्स ऑफ स्टॉक्स अगर हम ये जो बोल रहे हैं.
overall universe of stock is keep on changing, right? Like earning season mein I never go beyond 150, 100. More than 70, 80 is
ओके.
enough. So for Pete candidate, like मेरे को Pete candidate actually 50 भी मिल जाए तो बहुत बड़ी बात है as of in this market. But 50 is enough, right? 50 बहुत ले. उसके बाद से आपको एक दो आइडेंटिफाई करना है, एंट्री तो एक ही दो में करना है. So that
ओके.
is okay. But
इसी पे एक फॉलो अप क्वेश्चन है गौरव. सो देखिए, we discussed the peer query and all the other day with tweaking and all, right? और 50% और 30% year on year and quarter on quarter increasing and all. तो उसका एक रिजल्ट निकाला, and the list of stocks you recently shared on Twitter also, right? Couple of days back. तो I mean for my learning purpose, okay, not to challenge you, but तो query में बहुत सारे मैच नहीं हो रहे. So you are like pulling again from maybe like last quarter के results को भी आप उसको आप लेके आए हो, इसीलिए
मतलब
that's
मैं
why the
वो जो
list is
लिस्ट
little
ट्विटर पे
different.
डाला था वो मेरा
हम्म.
काफी रिसर्च किया हुआ लिस्ट रहता है. लाइक
हम्म.
व्हेन आई गो पब्लिकली विद समथिंग, मैं ऐसे रैंडम नहीं कुछ बोल देता हूँ. लाइक
हम्म.
आई रियली गो डीप एंड देन
नहीं,
आई
because
जस्ट पुट
I
ऑन.
to gain the confidence with कि हमने स्क्रीनर पे जो चलाया उसमें भी like 90 कुछ आए, and then like trying to fine tune tweak a little bit and all, बहुत सारे मैच नहीं हो रहे थे, इसीलिए that's
हाँ,
the reason I.
नहीं होंगे. द रीजन बीइंग क्योंकि वो प्रॉब्ली उस वक्त रिजल्ट नहीं आया होगा. सेकेंडली इवन रिजल्ट आया हुआ तो इफ यू सी आई हैव एडेड फ्यू अदर टू पैरामीटर लाइक आरएस एंड एक्यूमुलेशन. सो गुड रिजल्ट विद आरएस एंड एक्यूमुलेशन. सो माय फिल्टर वाज लाइक good RS, good accumulation जहाँ पे हो रहा है, along with good result. That is the strongest stocks in that Pete candidate. So that could be reason. After that, I look for some time previous quarter also. Like उसके अलावा capex वगैरह भी
Yeah,
देखता
it
हूँ
looks
जो
like
already.
Elcon and all, like
हाँ,
from previous
yeah,
quarter side, Balu Forge
correct,
and Silcher. Okay, got it.
correct, exactly.
Thank you so much, Gaurav,
No problem.
and really
I think
appreciate. Yeah,
अरे
you've
no
been.
problem, Pranav ji. No
Yeah,
problem.
thank you.
So I think we have already extended the time. If you have any questions, fine. Otherwise, happy to wrap up. Next book, as I said, right, it will be 100 Bagger by Christopher Mayer. I think already Chandra ji has volunteered, so great. Uh, go through the books. I'm sure, as I said in the first start of the presentation, right, we have to put lot of effort to. I mean, you should be deserving the the market is about to give you, right? I mean, so put effort to learn. If you're not learning, then eventually market आपसे वापस ले लेगा. So you have to be deserving to be getting all the success from the market.
Very true. Thanks, Gaurav bhai, for the great session.
अरे एनी टाइम दीपक जी, कैसे हो आप? ऑल गुड?
All good, bhai.
Okay, any other questions?
और एक चीज और
Thank
ये
you,
देखा
Gaurav.
गौरव भाई, ये रिजल्ट सेशन में जब से जैसे कुछ पेड कैंडिडेट को आप फिल्टर करके रखे हो, तो उसमें कम से कम आपको जो है क्या करते हैं, बेंच स्ट्रेंथ बना के रखना पड़ता है. अदरवाइज क्या होता है कि ऑल ऑफ अ सडन नेक्स्ट डे रिजल्ट के बाद वो गैप अप हो जाता है, तो आप यू कैन नॉट बाय. आपको वेट करना पड़ेगा उसको जो है जब तक कि वो आपके इसमें लाइन में ना आ जाए, और यू कैन बाय डिफरेंट वन.
Yeah, definitely.
कल ही जैसे एक था ऑर्किड फार्मा. गया जैसे गया देखने के लिए, तो देखता 16% ऑफ गैप अप हो गया था.
करेक्ट.
सेम EIH होटल में भी जो है 2-3 वीक 4 वीक पहले उसमें भी वही हुआ.
करेक्ट. नहीं, बेस्ट केस है दो से एस में भी ये हुआ था, सांगवी मोर में ये हुआ था. सो बेस्ट है कि टू थिंग, आइदर यू ऑलरेडी बीन ट्रैकिंग द स्टॉक, देन इट्स बेस्ट, आप ऑलरेडी उसमें पोजीशन ले लो द डे इज ब्रेकिंग आउट. सेकेंडली आप कर सकते हो कि वी कैन स्टार्ट विद सम एलोकेशन, लेट्स से 2%, वेयर स्टॉप लॉस विल बी, आई नो इवन इफ इट थोड़ा आप स्टॉप लॉस लूज छोड़ सकते हो उसमें. एंड इन दैट केस व्हेन द पुलबैक्स हैपन, यू scale it up.
गौरव जी.
जी पराग जी.
हेलो. आप ट्विटर हैंडल या ट्विटर लिंक आपका दे सकते हो क्या वापस प्लीज यहाँ पे?
जी. ऑलरेडी शेयर्ड है पराग जी, आई थिंक सम
शेयर किया
पंडारी
है,
जी हैव ऑलरेडी शेयर्ड. जी
या शेयर किया है
यहाँ पे ही या इस
आपके
चैट
आपके
में?
आपके मैसेज पे किया है, देखिए.
ओके. थैंक यू.
Thanks. By the way, don't just follow for the sake of follow. मतलब आप you should have a ट्यून होना चाहिए जो आइडिया मैं बहुत बक रहा हूँ. The problem is like there are a lot of people out there who talks, right? So make sure कि your rhythm should match, otherwise वो noise ऐड करेगा.
Your frequency is quite different, Gaurav.
अरे राकेश जी, कैसे हो आप? ऑल गुड?
Yeah, all good. Where you have posted this list? I couldn't see it actually in your Twitter handle.
I posted couple of days or 1 week back. Let me share it.
जब आप किसी को प्रॉपर्ली फॉलो करते हो तो उसका जो एवरी ट्वीट आपको देखना पड़ेगा, है कि नहीं?
नहीं,
ऐसा
नहीं है.
नहीं, आई एम सेइंग लाइक whoever you are following thoroughly or believe करते हो, then you should.
I only follow 2 people on Twitter, so I don't think I'll miss him. But
मैंने पिंक कर दिया सर.
Okay. गौरव जी, एक छोटा सा क्वेश्चन था रिगार्डिंग द पुलबैक से. जब वो वापस लेता देन वी ऐड नॉर्मली, या फिर पुलबैक मतलब ड्यूरिंग द पुलबैक हम ऐड करना चालू करें?
नहीं, आप ड्यूरिंग द पुलबैक मत करो, ऑलवेज वेट फॉर द पुलबैक टू कंप्लीट. सो आई विल शो यू वन
एंड द
एग्जांपल.
follow up rally, right?
Exactly. So
Okay.
आप you use this pivot concept very properly. आप use कर सकते हो. So I'll show you. So 11 weekly EMA पे the Silcher, for example, right now, right now नहीं, a few weeks back, if see this consolidation was happening in 11 weekly EMA in the last these 3
Right.
weeks, 8 January, 8 January and 15 Jan, right? So these 3 days it pullback completed. Now I'm not saying to add you here. I mean add here. So what I'll do, I'll go
Right.
in daily chart now. If you see, this was the base it is forming. So 8th January, so this was the pullback completing. Now, if you see this pocket pivot, right? You see the green candle, pocket pivot. Now, I'm saying, I'm
Right.
requesting you to basically add over here. इस zone में आप add करो. I'm not saying you to when ये already move कर गया है, then it is a very late. Then it so same question what Bhardwaj ji asked, right? Like pullback होने के बाद जब ये move करना शुरू कर रहा है, right? वापस at that point you please
Right.
add. So basically you see look for this
Okay.
pocket pivot, and the moment you see the pocket pivot on a daily chart coming out of a good decent pullback on the weekly. So on weekly, if you wait for this pullback to complete to bounce back to complete, then you will enter at this, and it will be too late. 23 Jan में already a 22% move हो गया. But the
Right.
moment you see that consolidation, you look for the daily chart, and the moment you see the daily chart, you see this pullback, this pocket pivot. The moment you see this kind of pocket pivot, you can start scaling up. So आप एक सही point of time पे enter कर गए हो, जहाँ पे you're not entering in this zone where you have to go through consolidation, but you are entering at that zone where you're move is just about to start.
Right. Okay. Thank you.
Gaurav, can I say something?
Ji, Rakesh, please.
It is something like if you have seen the people riding the waves.
Yeah.
It is that opportunity when you have to see that how the rising wave you have to ride. There's something like that only, if I'm not wrong.
You're right. Actually, you're right. I mean, behind the wave of institutions, I mean, they are the
Yes.
real market game real changer, right? And so you have to find that footprints of those people in the volume bar. The moment you understand that, you will be able to ride along with them.
How can we actually that some list you had given out that HNIs and all that, no?
Ji.
How to follow them? That I'm unaware of that thing.
Use a
Can it
screener,
be
no?
done
Yeah,
on
use screener.
screener?
So
Can you
if I
just
show you,
can you show
if
me
I
a?
show you here, I don't know if you have a premium version, but screener, I think
I
you
have
may
the
have,
premium
right?
version. Yes.
Perfect. So you go to here. You find anybody, like for example, Ashish sir, not here, sorry, my bad. Go to tools, go to search shareholders, and you search whatever shareholder you want. For example, Dolly Khanna. So you just follow him. So if you here abhi unfollow kar raha hu, you just follow him. The moment you follow him, if your email is registered with this account, it will automatically start sending to your inbox. So for example, if I show you my alerts, so something like this, like all the people you follow, right, it will basically here, and it will start triggering an email to your inboxes. So every weekend you can have a routine that, okay, just quickly go through which are the positions they have taken, and that will give you, some kind of stock idea there also.
Okay. Fine. Thank you.
No problem. Okay, so Kishan, shall we end this up?
Yeah. If no question, then we can wrap it up.
Thank you very much.
Yeah, thanks everyone. Okay, chalo. Cheers
All
everyone.
right.
Bye.
Thank you, Gaurav.
Thank you. Thank you. Have a great day.
Thank you,
You too, guys. Yeah, bye.
Thanks a lot.